For 30 minutes from the close of trading here in the U.S., live from Bloomberg's world headquarters in New York, I'm Scarlet.
And I'm Joe Weisenthal.
U.S. stocks falling with banks leading losses in the S&P 500 as markets weigh the impact of President-elect Donald Trump's policies.
But the question is, what do you miss?
Coming up in just 30 minutes, we've got Kinko's founder and famed short seller Jim Chanos sitting down with us for an entire hour. We're going to drill down on which industries may be ripe for disruption as President-elect Donald Trump takes the helm. Plus, we won't just stay in the U.S. Concerns about how Trump's global trade policies have spurred rallies and sell-offs from emerging market currencies to hard commodities. We'll look at how Chanos is protecting his positions in China and Europe. And finally, one area that did miss the Trump bump, tech stocks, down almost 2% since Election Day. Jim has been extremely vocal on a number of names, including Alibaba, Tesla, and Solar City. We'll see where he stands ahead of a major shareholder vote tomorrow. All right, let's get you a check on where the major indexes stand as we head towards the close. Bloomberg's Abigail Doolittle has more. Abigail?
Hi there, Scarlett. So we're looking at the same sort of trading for U.S. stocks going into the close that we've seen all day. Mixed, tired, lackluster. We have the Dow and the S&P 500 down slightly, the NASDAQ up slightly. Now, the Dow right now is on pace to snap a 7-day winning streak. Weighing on both the Dow and the S&P 500 are the financials, as you had mentioned. In fact, when we take a look at an S&P 500 bank index, it is down 1.7%, a pretty dramatic drop there. In fact, on pace for its worst or first drop, I should say, in 8 days. So lots of weakness within the financials. And we break it down, we go micro and look at the individual stocks. Lots of weakness there. Bank of America, JP Morgan, Citigroup, Wells Fargo, all lower. Now, some of this could be taking a bit of a breather from last week's big rally, but we also have lots of downgrades out there today from Baird, Bernstein, Piper Jaffray, Morgan Stanley, in fact, talking about valuation. But when we go into the Bloomberg and we take a look at a chart of the XLF, which had its best week last week in quite some time, we are looking at a chart provided to us by Jonathan Krinsky at MKM Partners, and this is G#BTV 4872. And when he was kind enough to share it with us last week, the XLF was on the cusp of making a breakout. Well, that, in fact, has happened. We can see that over here to this side of the chart. We see that the XLF is above the 2015 highs. We also see that the XLF is outperforming the S&P 500 over the last 3 years. It has snapped a downtrend. We reached back out to him today to find out whether or not he still thought that this breakout was legitimate. He said that, yes, it is. He thinks that these stocks, the banks, the financials will trade higher into the year end. But on this weakness, he wouldn't be rushing to buy this. So perhaps investors pick their points around the financials.
All right. Abigail Doolittle, thank you so much.
What do you miss? Markets saw an extraordinary sell-off in bonds and a rally in equities in the wake of Donald Trump's surprise election victory. Emerging markets were one area that got really hit hard after the election. I spoke with Bloomberg's Mark Cudmore and asked him if it made sense for all the EMs to sell off the way they did.
Well, the most dramatic thing we're seeing is a really big mega move up in U.S. yields, and that's a severe monetary tightening for emerging markets. And when that's combined with stronger dollar as well, it's kind of a double whammy there in terms of accessing capital, especially if they have large external debt piles. And so all emerging markets are getting hit uniformly. But in fact, you know, there's a real differentiation amongst EM markets about how big an external debt pile they have, whether they have a current account surplus, whether they have a current account deficit. And therefore, there's a real opportunity now for macro investors to start differentiating between EM currencies.
So who are some of the countries whose financial accounts look a lot better and are less exposed to the rising dollar and rising U.S. yields?
Well, one of the most obvious ones is probably Chile. It has a trade deficit with the U.S. already, so it's unlikely to be the target of kind of any protectionist measures. It's also heavily dependent on copper exports, and as we know, copper is completely roaring at the moment. So this should be a real boost to the Chilean economy, and it has a very, very small debt pile, so it's not that exposed to higher U.S. yields either. Another one that's kind of interesting is Russia. I mean, Russia, because of the sanctions that have been going on the last couple of years, is already quite isolated and doesn't have that exposure. So, you know, it's already gone through the bad patch and is less affected right now from the move higher in U.S. yields.
How important to the Russia trade is the prospect of a softening of relations, and how much is just, even if there's no softening, the fundamentals there look a lot better than some of the other EMs?
I think there's potential for a small boost if there is a softening of sanctions due to a Trump presidency, but I don't think the Russia trade is about that. I think the point is that Russia has gone through an incredibly tough recession over the last couple of years, but it's already hit the bottom, and in the second derivative, the change in direction of growth is higher now. So, and this is kind of irrelevant what's happening on externally, because they already have very low external debt needs in the government level, at least.
All right, so let's talk about the opposite side of the coin. Which are some countries whose financial situation really makes them vulnerable to this new macro environment?
Well, South Africa is always an obvious one whenever emerging markets are selling off. It's a high beta currency. It's got a large current account deficit. It's got relatively large funding needs, so external deficits. So it's sensitive to higher U.S. rates. And the domestic economy is really struggling anyway. It's, been kind of not quite in recession, but it's been very subdued growth. So South Africa is vulnerable. Another area that might be interesting is Eastern Europe. That might be squeezed from a slightly more aggressive Russia in the east and a bit of a slowdown in European growth if Trump does impose some protectionist measures to the west.
Right, let's talk about the global growth story, because obviously there's the rates component, but then there's the fear that Trump will contribute to a greater deglobalization of the world. World trade is already slowing down, declining by some measures, fears that could continue. Who gets hit the hardest if those trends continue?
Yeah, it's a good question. I mean, really, we're looking at the real trade-sensitive currencies or countries. South Korea is a very kind of obvious one. And generally, in Asia are some of the more vulnerable countries to that kind of slowdown in trade. Thailand, Malaysia. But I said South Korea really stands out in the emerging market world. Japan itself in the developed market world is also in trouble. But interestingly enough, some of the economies with the most resilient domestic economy and more insulated are also in Asia. So Indonesia is a good example, Philippines. Even India, though, some people wonder whether the tech sector might be hit there.
You mentioned the Philippines. They have their own leader who people have likened to Trump. That caused a lot of investor anxiety after Duterte won. What are the prospects there?
Well, I mean, I think Philippines is a very strong domestic economy. And you know what? Maybe in hindsight, people will say his swivel to China ahead of the elections was quite smart in hindsight. I mean, China's already their biggest trade partner, absolutely dominant, both imports and exports, and is becoming so important for the Philippines economy. U.S. is becoming increasingly less relevant. So, you know what? Maybe this was a clever swivel by Duterte. He is certainly a controversial candidate, but the domestic economy is doing well.
That was Bloomberg's FX market analyst, Mark Cudmore.
Coming up, variation in sector returns jumps to bull market highs. Active money managers are happy as dispersion is back and stocks increase. We'll dissect the winners and losers. This is Bloomberg. right, we have some breaking news on J.P. Morgan. The bank is said to have paid $200 million to settle an investigation by the Department of Justice and the SEC into its China hiring probe. And it's said to settle this as quickly as Thursday. So it hasn't happened yet, but our reporting indicates that this is imminent. So this is, again, a settlement over its China hires. The allegations were that it hired children of Chinese decision makers to win business.
Right. This was controversy. It kind of first sprang up a few years ago about American banks hiring the children of influential Chinese leaders to win business. So it looks like these are being wrapped up, some of these probes.
3-year investigation, like you mentioned, and the question was whether it violated U.S. anti-bribery laws. All right. Meantime, Donald Trump, his election has caused the biggest dispersion among U.S. equities in almost 8 years. And for professional stock pickers, they couldn't be happier. Here to explain is Bloomberg Stocks reporter Oliver Rennick. Oliver?
Thank you, Scarlet. Indeed, if there's one positive here from a stock picker's perspective, it's the idea that things are starting to break apart in the market into a great deal. So let's just take a look firstly at what's been happening exactly since Tuesday, this historic election. There's been a pretty massive dispersion within the market when you're looking at sectors. So what I'm looking at here is SPXL1 index GRR function. This is group ranked returns. First thing you want to point out here is the financials group. Up 9.4%. Until today, it was up even more. It was up over 10%. This is a group that has been tied to Donald Trump's numbers since the get-go, as we pointed out earlier in the month with those correlations. And indeed, they did spike up pretty strongly. On the bottom half here are some of the defensive stocks, some of the dividend-type companies that have been doing very well throughout the year. People are now taking money out of those. You're looking at utilities, staples, some REITs in the real estate group as well, down. Utilities down 6%. So a little bit of rebound today, but this is basically the trend. And here's what's very interesting about this. If you take the top and you take the bottom, that's kind of a way to look at dispersion, which is essentially the amount of variation within the stock market. Very important, arguably the most important thing if you're trying to pick stocks, because you want to pick stuff that's actually going to be rewarded and you want to short stocks that are going to do poorly. This is showing you that dispersion that exists on the sector level, this chart right here. The white line is showing the dispersion for that period, which is roughly the 5 days after the election. So this is the difference between the top performer and the bottom performer. Right over here, what you're looking at, 17. That was the current value yesterday. That's a 17 percentage point difference between financials and utilities. That's really important because if you look at how high that is, it goes back. Not till 2009 do we see that level of sector dispersion that we've seen in the past week. That's pretty incredible. People have been waiting for this for a long time. Whether or not it's here to stay is a little bit more arguable, but the amount of dispersion we've seen within the market has been pretty incredible. And here's the other thing on top of it is you look at the blue line, the S&P, it's actually been rising. So typically, you look back here, the instances in which we've seen spikes of dispersion within the market, it's usually when the market's going down. So you look right here, 2011, we had dispersion spike up in those white lines, obviously, as the market went down. Take it back massive amounts as we had the crash in 2008. Take it back even further in the reminiscent of the dot-com era as things started to peel off and then eventually rebound, also high dispersion levels. So you got to figure out maybe where we are, but the fact that right now it's in a market moving up is pretty good. And then finally, I just want to point out that I think investors to some extent are recognizing this and they're putting money to work. This is looking at flows in some of the major ETFs in those sectors. Look at the top chart. This is the financial sector, the Spider Fund, $738 billion in inflows. This is a pretty huge amount over the past week here. Look down at the industrial space, $92 billion. This is a large amount over about a week period. You can see some money actually going to work here. So I think investors are realizing this is sort of an opportunity that hasn't been around for a while. And, you know, at the end of the day, that's really what's important. It's about being able to have returns that are going to reflect the fundamentals of companies. And that only really happens when stocks are going in different directions.
So these are obviously really killer charts, and you can see why active fund managers are excited about this. Finally, not everything moving together.
Yeah.
But were they in the right positions? I mean, it's only good if they bet right.
Right. So as you can see, that last chart, they're now starting to get into those positions. It kind of depends on how you look at it. But overall, there had been some money moving into some of the more beaten up groups of the market, which just so happened to be some of the financials, some of the industrials. Really, if you take it back to June, money has started coming out of the more defensive sectors. Now, I don't know if those investors were doing it because they said Donald Trump was going to win, announce this huge sort of program that they're expecting that's then going to drive these industries or loosen regulations. I don't know if it was the right reason, but it was probably more sort of a reversion trade that people were starting to look at some of these sectors. hey, whatever works, works.
Certainly it's good news for those active fund managers, but I wonder how long before the ETF industry comes up with some multi-factor strategy that encompasses all of this and puts the active fund manager right back out flat on his back.
That's exactly really the conflict, and that's why we chose to look at this right now, because that really is, and you guys are going to talk about this with Jim Chanos later, I'm sure. That's what you want to see, right, is to have that kind of dispersion in a market that has been so saturated with the passive type investing, the sort of multi-factor, which is between passive and active. But this is sort of a breath of fresh air. Ultimately, what you have to remember is that the market can't go completely one way or the other, right? At least it doesn't really make logical sense. It can't be a completely passive market, and it won't be a completely active market. So finding that equilibrium when things like this happen, I think it does give a little hope.
Is there any reason to think this will persist, that we'll continue to see dispersion, or is this just a blip, sort of a new thing, and then everything starts to move in the same direction again?
That's a great question, and there's no real way to know for sure. Right. But what I would wager is that we're going to now be in an environment where investors and analysts are hanging on every word that President Trump says, because there's so much unknown and there's so much at stake. So within that comes volatility, and within volatility is bred dispersion oftentimes. So volatility is not always bad.
All right, Oliver Rennick, Bloomberg stocks reporter. Awesome charts. Thank you very much.
All right, we want to reiterate the headlines that we just broke a few moments ago. J.P. Morgan said to settle the investigation into its hiring practice of children of Chinese decision makers to win business. According to our reporting, J.P. Morgan will pay about $200 million to settle these allegations. You're looking there at J.P. Morgan shares falling to session lows, off by 3%, the first back-to-back decline for JPM since the election of Donald Trump. Remember, financials had gotten a big boost as everyone saw steeper yield curves and rising rates as good for these beaten down financials.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. Billionaire Michael Platt's Bluecrest Capital Management is having what he calls an exceptional trading year. The hedge fund is up 40% so far. Platt made a couple of big changes. He's trading with high levels of leverage, and he's returned all client money, and now Bluecrest only manages Platt's fortune and that of his partners. The founder and former CEO of Lending Club is planning a return to the industry he helped pioneer. According to a filing in California, Renaud Laplanche has started a new firm called Credify Finance. A separate filing shows Credify was incorporated in Delaware in May. The same month, Laplanche resigned from Lending Club during an internal investigation into a botched loan sale. And that's your Business Flash update. Scarlet, you're looking at Walmart ahead of tomorrow's earnings?
That's right, Joe. Walmart is the next big box retailer to report earnings, and it'll announce its results before Thursday's U.S. opening bell. Now, we know that the CEO, Doug McMillon, last month said he expects income next fiscal year. And here we're talking about the 12 months starting next January to be, quote, relatively flat. So let's find out why in today's The Numbers Don't Lie. Walmart's outlook, which missed analyst estimates, sent its shares tumbling at the time, signals that the retailer needs to do more to compete against Amazon and draw customers into its supercenters. Annual revenue has been on a fairly consistent downward slide from 1% and is now looking at 1% growth in the fiscal year 2016. Walmart has been pouring money into its website as well as its mobile app, and last quarter online sales grew almost 12% from a year earlier. But if you compare that to total U.S. online sales, those rose almost 16%. Amazon's growth, meantime, was north of 25%, so certainly a big difference there. This year, Walmart aims to grow its online sales at a rate of 20 to 30%. Its $3.3 billion acquisition of Jet.com should help that effort. That site has over 200 million unique visitors, and Walmart's online strategy is also highlighted by its recent move to double its stake in the online retailer JD.com. Walmart is also looking to make shopping more convenient, folding in some elements from its online grocery ordering program. You might be surprised to learn, as I was, that the company is the largest U.S. grocer. That category makes up 56% of its U.S. revenue. Walmart hopes that its grocery business will drive traffic into stores and therefore protect its business against Amazon. And while it builds and reinforces its online presence, Walmart is pulling back on new openings. Instead, it's spending more to spruce up its existing stores. Store count is slowing, but the real deceleration doesn't actually take place until fiscal 2018, which is why you don't really see it steady off or plateau until later on. Now, for Walmart to remain the world's biggest retailer by revenue, it's going to have to make all these plans work. We're going to be following Walmart's results before Thursday's U.S. opening bell. Joe?
In about 10 minutes, hedge fund manager Jim Chanos of Kinnikos is sitting down with us for the whole hour. Looking forward to his comments on the election, what it means for infrastructure stocks, metals. He's got a bearish bet on Caterpillar that could be interesting with President-elect Donald Trump at the helm. Stick around. This is Bloomberg.
Today's count.
Scarlet, what'd you miss? Another way of looking at market breadth, which is the number of advancers versus decliners. So this is a chart from Dan Curtis, one of our producers here for Bloomberg Television. And the white line shows the percentage of S&P 500 members with the RSI, Relative Strength Index, above 70, which indicates that it is overbought. The purple line shows the Dow, and the yellow line shows the NASDAQ. And this is as of yesterday's close. Normally, when there are big spikes here in the RSI above 70, you can see that it's usually the big cap indexes, the S&P and the Dow, the purple line for the Dow, right? The white line for the S&P. The yellow line, which is the NASDAQ, doesn't really show up as much until this latest leg higher, which is, of course, the post-election rally. The NASDAQ has more than 2,500 members. Many of them are small cap and mid cap companies. So this time around, we're seeing a lot more participation across the cap space, whether it's big cap, mega cap, or small cap.
And that's interesting because the NASDAQ has had several days that are weak because of the dominance of tech. But it's interesting that so many of the smaller components that we don't talk about must be doing very well.
Such as the financials.
So it shows you have to dig beyond the headline.
Yes.
I'm looking at the ramifications of the post-election rate spike. It only stands to reason that if rates go higher, you're less likely to refi your home. This chart shows in green 30-year yields, which I've inverted. So when it goes down, that means higher yields. And the MBAA mortgage refi index year-over-year change, it lines up really well, and it makes sense. When yields spike, people are less inclined to refi their mortgages. And so keep an eye on that blue line to see if refis plunge, taking some buying powder out of the hands of homeowners.
Yeah, I mean, people were expecting the Fed to raise rates, but they didn't see it
Not
coming
this fast.
like this.
Right, so keep an eye on that.
All right, and don't forget, we've got noted short seller Jim Chanos of Kinnikos joining us exclusively for the next hour. Joe, we've been talking nonstop about President-elect Donald Trump, his policies, what they mean for different industries and different companies. We're going to get an expert's take on it.
Cannot wait.
Jim Chanos coming up at 4 p.m. Eastern Time. And as we head to the close, this is what the market snapshot looks like. You have the Dow and the S&P falling, the NASDAQ gaining 1/3 of 1%, the Dow retreating from a record high. This is Bloomberg.
Welcome.
moments away from the closing bell. What'd you miss? Global stocks drifting into slight losses, but renewed declines in bond prices suggest that risk appetite is still holding up after Donald Trump's victory in last week's elections. I'm Scarlet Fu.
And I'm Joe Weisenthal. Welcome to all of our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern Time.
We begin with our market minutes. The Dow Jones Industrial Average snapping a 7-day winning streak and actually retreating from a record high as well. Pretty much, though, if you look at the three major indexes, we closed mixed, and you do have a pretty mixed variation of sectors that did well. If you come inside the Bloomberg here, Joe, you can see that telecoms, tech, and consumer discretionary fared the best, while 8 out of the 11 sectors closed down.
Interesting to see financials lagging. Of course, they've been a blistering rally since the election, and tech, which had been a laggard post-election, doing better. Yeah,
extending their rebound to a second day. Now, in terms of actual individual names that are worth paying attention to here, Target up by 6.4%, best rally in 7 years, leading the other retailers because third quarter earnings showed a strong back-to-school shopping season for that company. Mallinckrodt tumbling 12%, heavy volume there for this drug maker. It was mentioned negatively by Citron Research's Andrew Left, who's known for his short positions. And in fact, he was just on with Julie Hyman and myself telling us about how the CEO of Mallinckrodt committed securities fraud by telling investors that one of its drugs got 61% of sales for Medicare rather than 25%.
Quick look at the government bond market. A little bit of a quiet down. I mean, there's just been so much activity here. Very little happening today. You can see 10-year yield at the U.S. unchanged at 2.22%, and 2-year yield up barely up to 1%.
And, of course, in currencies, we keep an eye on the dollar. Today, I'm looking at it versus the euro. The dollar strengthening for an 8th day. That is the longest winning streak against the euro since 2012, if you can believe it. Monetary divergence, clearly the theme at work here after you had decent factory output and retail sales data from yesterday. We could, however, see these gains fade before Janet Yellen's testimony tomorrow before Congress, Joe.
And finally, on the commodities front, also kind of quiet. Gold up marginally. Crude oil having had 2 big days in a row, selling off a little bit. And copper there in the middle, that is another thing that when it was on a tear post-election and even pre-election, selling off a bit, down 1.67%.
All right, those are today's market minutes. This week, you had top investors from Ray Dalio of Bridgewater to Bill Gross of Janus Capital sounding off on President-elect Donald Trump's victory. Joining us now to share his playbook for the Trump presidency is legendary short seller Jim Chanos. He is founder and president of Kinnikos Associates, and he joins us for the entire hour. Great to have you. Thanks so much for coming in today.
Hi, guys. How are you?
Good, good. So let's get your thoughts first on this risk rally that we've seen since the Trump election victory. Risk rally, of course, in equities, in the dollar, and, of course, the sell-off in bonds. Does it make sense to you?
I think you have to be a little bit careful because these things don't always go as people initially expect. I sent some things, I think, over to you guys a few hours ago. I remember the George W. Bush ascendance, where he had both houses of Congress, pro-business, going to follow in on the Clinton legacy. The economy was booming at the time. Was going to be cut regulation. And in fact, events overtook that administration pretty quickly, not only because of 9/11, but we had a series of scandals, Enron, WorldCom, Tyco. And in fact, the administration ended up being probably one of the most anti-corporate administrations that we've seen. And we had Sarbanes-Oxley following Enron, and we had a very aggressive Justice Department going after corporate wrongdoing. That's not what you would have thought in November of 2000 or December, whenever that election was decided. Let's go back to 08, November, December
more recent history.
Of 08, and Barack Obama, a relatively inexperienced senator, coming in, community organizer, some thought socialist, some thought even more to the left, was going to tear apart capitalism as we know it, throw bankers in jail, nationalize some financial institutions. Pundit after pundit after pundit called for the end of the world. It didn't quite work out that way. And in fact, it was pretty good time to be not only in corporate America, but one of the 1% and a financial asset owner. Not exactly the initial knee-jerk reaction.
So for all those people who think that Trump is the second coming of Reagan, are they getting it wrong?
It's too early to tell. I mean, there's lots of cross currents here. We're going to know in the transition, but you have a series of pronouncements by the president-elect, as well as others. Some saying he wants to dismantle Dodd-Frank,
right.
But on the other hand, bring back Glass-Steagall. Well, which is it? Those are diametrically sort of opposite sides of the coin. So, that's raises questions in my mind. Where is the philosophy here? We'll know more as we see more appointments. Number two, as I indicated with both Bush and to a lesser extent Obama, events conspire to change your view. And events generally end up being greater than the White House. And I think that's, at the end of the day, something we all have to keep in mind. The window to shape this policy that he wants to do will be very, very short. Even with two houses, both W and Obama, got very little done with, on the economic side in the first 2 years of their administrations.
The Republicans under Obama were famous sort of like, they were deficit hawks. They sort of got their anti-deficit religion that they lost under the W years. Now people are betting that they're going to forget about deficits again because there's
amazing how that works, isn't it?
White House. People making very big bets on infrastructure, Caterpillar surging, base metals surging on this idea that we're going to be building all these bridges and hospitals. What do you think about this story?
Well, let's put this in perspective. The driver for commodities and construction equipment is not going to be the United States, even with an infrastructure boom. We're talking about doing $1 trillion over 10 years. That's $100 billion a year in infrastructure. China does that pretty much in a week. So China slowing down or heating up.
In a maximalist scenario, this is small potatoes.
This is small potatoes relative to the global commodity markets, global demand for industrial commodity. That tune plays in Beijing, not Washington.
Well, Steve Mnuchin, who is one of Donald Trump's economic advisors, said to be in the running for maybe Treasury Secretary, he says the Trump team is looking into maybe setting up an infrastructure bank to fund these different projects. Right. Now, never mind the fact that Hillary Clinton had proposed something similar and the Trump team dismissed that and said that it was an awful idea. Tell us what the potential pitfalls might be here for an infrastructure bank set up for these kinds of projects.
Well, again, I mean, we've been down this road. Remember Build America bonds in 2009? I mean, and the idea here is, again, from just reading Mr. Trump's website and campaign,
which is what we only have,
is that it would be a public-private partnership. It wouldn't be classic Keynesian. Right. Let's just pass a law and build bridges and borrow the money and increase the deficit. It would be a hybrid. And if we look at some of the hybrid public-private partnership projects, toll roads, selling parking meters, they haven't been great successes because, again, the amount needed to get a return to entice the private sector tends to make it less of a good deal for the taxpayer, and you only get projects that will have an immediate economic return. The key about infrastructure spending is it generally spurs lots of other things. So replicating a toll road between two busy cities with an existing road doesn't help as much as, for example, putting in something new somewhere. And so this is the problem with public-private partnerships.
Do you see, as a short seller, when you hear something like a big sort of public-private partnership, all this money coming out of D.C., do you sort of start to sense opportunities in the days ahead for betting against the crowds?
No. But again, it's way too early to tell, Joe. I mean, we don't really know specifics. We don't know implementation. We don't even know the people yet. Mm-hmm. So it's just way, way too early to tell what a roadmap for political aspects are. And again, we're bottoms-up people, so we're going to be looking at the companies. Now, you indicated at the beginning, this has led to a whoosh-up in ways to play things.
Right.
And usually that ends up disappointing people more often than not. Not saying always does, but the whole idea that immediately this is going to help a Caterpillar tractor or whatever it might be, I think is much more problematic.
Well, before the election, you were saying that you saw an unwind, a collapse coming for Caterpillar. Are you still bearish on Caterpillar, even with the expected infrastructure boom?
We are. So, and the problem is it hasn't mattered. So I'd point out when we first went public, on Caterpillar, talked about it here and elsewhere, in 2012. Caterpillar was supposed to earn this year $15 and $18 next year. It's going to earn about a little over $3 this year.
328, yeah.
So, and the stock is up a little bit over that 5-year period.
Cruelty of markets.
It's the cruelty of markets, right? So you can get them really right and still obviously get the stocks wrong. But at the end of the day, it's going to take a lot more than an incremental $100 billion. What's going to happen to interest rates, for example, at the commercial real estate in the United States, the construction boom that's occurred there may more than offset the U.S. infrastructure. And then again,
a lot of that, I mean, we just showed the chart. A lot of that Caterpillar rally, most of it was before this election. I mean, it has spurred in the last week or so. What is the market
Maybe the market knew more than we did about the Trump election.
Yeah, it's possible that the market, efficient markets called Trump right. But where do you think
China.
the gap
is?
China?
It was China. Yeah. What most of the move in commodities, construction stocks, whatever, started really a while ago on the back of China's increased stimulus. They pushed down on the accelerator again after the stock market bubble blew up. And also they cut back production in their coal mines over the winter. And this has created a shortage in coal. Coal prices have doubled and tripled. And this has then dragged up copper prices, iron ore prices. So the whole complex has been going up all year.
You've been warning about imbalances and bubbles and overcapacity in China for a long time.
Yep.
Is there still some huge reckoning out there that's going to come one day?
We're just climbing to higher rungs on the diving board.
So it's just
we're just adding debt still 2x to 3x GDP. And inexorably, what cannot grow to the sky will not. And we're as bearish as we've ever been.
Just to kind of wrap up our conversation on Trump and what kind of policies he may enact, I understand that it's still too early to tell. We don't know exactly what he's going to do. But in general, this sense that regulation will get rolled back. What kind of opportunities does that create for someone like you who's looking for instances of corporate malfeasance or corruption or wrongdoing?
Well, see, again, I'm not so sure, because one of the more interesting developments politically that we've seen this year was in the congressional hearings in the drug area and for Wells Fargo. In the past, you could generally rely on the Republicans in both the Senate and the House to provide cover for business executives who were brought up before the Hill for a grilling. You know, in this case, that's not what we saw in 2016. The Republicans were every bit as aggressive in going after Valiant and Mr. Shkreli and Milan and Mr. Stumpf, and that's a change. And so what it's telling us is the populist movement that elected Donald Trump is also being affected on the hills of Congress, the halls of Congress, in that they increasingly now, and the Republicans have said it, they're the party of the working man. And so corporate behavior that is being seen as hurting the consumer, I think it's going to be under a lot more scrutiny, even in this administration.
All right, perfect. We're going to pick up right on that thought in a bit. Jim Chanos, founder and president of Kinnikos Associates, he is sticking with us. We've had 2 surprise votes this year, Brexit and, of course, the U.S. election. Could we see more populist uprisings around the world? More on this topic with Jim Chanos coming up. This is Bloomberg. Breaking news on Cisco. The company reported results and first quarter adjusted earnings per share beating the consensus estimate by 2 pennies. The outlook, however, missing the consensus forecast. So when you look at the stock, no surprise it is down by better than 4% in after-hours trading.
We are back with our special guest for the hour, Jim Chanos, founder and president of Kinnikos Associates. Now that the elections are over, all the major volatile elements, it appears people are starting to pay attention in Europe. You were just talking about politics and populism rising on the right. It's not a U.S.-contained story. In fact, it arguably started with Brexit or started earlier. What do you attribute it all to? Is there a common underlying element to it?
I mean, we may, again, emphasis on may, we may be seeing one of these great sea changes that we saw going back to 1932 and 1970 with FDR and the advent of big government, big state, and the advent of labor, labor's power growing for the next 40 years. And then the next one was sort of 79, 80. It started in the UK, ironically, Thatcher, and then Reagan. And we saw the breaking of the unions, the coal miners in the UK, air traffic control in the US. And we saw basically, 34 years of the advent of capital over labor. People forget there was a better part of a 30-some-year bear market in bonds from the 40s to the 70s.
Bonds go down?
Bonds went down. When I got into Wall Street, rates were 14%, and bonds were called certificates of confiscation. Not a bad time to buy them. And if this is something that's global, if we're seeing an advent of the middle class and the lower classes fighting back, income redistribution, crony capitalism, all these things, then it's a big deal. Then it's something that you will have to adjust not only your portfolios, but maybe your lifestyle, too.
Well, you made that link to how...
But it might be a false start, too.
Right,
Again, we're not going to know for a while.
Well, the early instances of, say, Republicans being on board with Democrats and slamming and shaming Scarlet and John Stumpf. Do you think populism tends to lead to good or bad corporate governance?
Well, it'll be different. It'll be different because a more populist set of viewpoints, in many ways, will actually be more regulatory, if not necessarily with more regulatory agencies, with tougher enforcement, law enforcement, more criminal actions. So you could get the same thing or worse from a de facto point of view, if not a de jure point of view. And I think that's an important thing to try to figure out. But I mean, again, we've got the Italy referendum coming here. We've got the rise of the right in France and elsewhere. If you see the dissolution of the EU, then you know that probably this is something, much more momentous.
Yeah, and if you look at the election calendar, you mentioned the Italian referendum, the Austrian presidential election December 4th. Then you've got the Dutch parliamentary elections, the French presidential elections, round 1 in April. German federal elections will be a big one, Joe, in February.
I don't know if you saw, there was a great headline on Bloomberg today about the French election. It said pollsters don't see Le Pen as having a chance, which I think was obviously tongue-in-cheek.
We know how that works.
Dry humor. Obama was in Greece this week. You obviously paid a lot of attention to the Eurozone crisis, which sort of started in Greece, arguably. How much are we still paying the price for essentially having done a bad job in the U.S. and Europe dealing with the financial crisis?
Good question.
Well, I think again, that is a lot of that drove this election. So in many cases, the resentment of what happened in 08 and 09 with the bailouts, and people walking scot-free as the middle class lost their jobs or their life savings. We still paying the political price for that. And I think that's one of the things the Democratic Party missed. So it hasn't been forgotten. And keep in mind that Europe's crisis was much more after ours, 11 and 12. So they're still almost, almost white hot in resentment on that. And then the difference between North and South in Europe. And so right there, it's still playing out in almost real time.
So give us an update on how your portfolio picks are playing out in Europe. What are you short? What are you long?
We're not short anything you would see as thematic in Europe. Europe is probably our most idiosyncratic part of the portfolio. A lot of one-offs, just sort of bad businesses and odd accounting and that sort of thing, which is much more into our wheelhouse.
So
give us a name.
You would see much more thematic kind of thing in Asia, or maybe to a lesser extent in America. I'll pass on the idiosyncratic names in Europe. We are still short the commodity space, so a lot of those trade in London.
What's the thematic trade in the U.S.? I think people sort of have some idea of what your thematic ideas are for Asia related to commodities, China. Yeah. What are the themes that you're short in the U.S.?
We got much lower to the ground in our energy shorts late last year, early this year, and we have put a lot of those back out. And I continue to believe that the North American exploration production space, the so-called frackers, is an uneconomic business model. And a lot of what people thought and hoped would happen, that i.e. these companies would be put out of business at $30 and $40 oil and would not get capital. In fact, not only has not happened, but these companies are getting capital to increase production again going into next year. None of them have, in aggregate, generated any free cash flow.
Sounds like zombie firms.
Well, they're much more than zombie. They've brought their break-evens down, and in fact, they're growing again. Unfortunately for the shareholders, they're growing uneconomically.
All right, we're going to come back to you on more of these positions on commodities companies. Jim Chanos sticking around, founder and president of Kinnikos Associates. One of the big stories on Wall Street this week is what President-elect Donald Trump is going to do about financial regulation. Does he roll it back? We're going to get Jim's take on that. This is Bloomberg. With hedge fund manager Jim Chanos of Kinnikos. And Jim, I want to start by showing you a chart on the Bloomberg here. It's the great rotation into financials. And we've seen how the financial stocks have just zoomed higher after underperforming analyst estimates since the financial crisis. This blue line here is the average price target for analysts for the next 12 to 18 months. And for the first time since the bull market began, we're now the share prices themselves have moved above that analyst estimate target.
Yeah, Jim, I was thinking back to what you were talking about in the last segment about how a populist administration could be, in a sense, more regulatory burdensome than a sort of regulatory climate and a sort of traditional regulators, in the sense that if you have a more antagonistic relationship. Do you think people who are flinging their money at financials in the wake of this election are ignoring lots of signs out of this administration that it may be hostile towards banks?
Well, if not hostile, more punitive to bad behavior. And I think that's the important thing. So, for example, if you look at some interviews that have circulated with Steve Bannon, who's going to be his chief strategist, he advocates a hard capitalism. And, that's something I actually find, refreshing. in that failure is failure. Taxpayers should not be on the hook.
He said it was a mistake that no bankers were jailed.
He did, and so I think that if you adhere to that, where actually you have success, you reward success, but you penalize failure, we're getting back to, I think, things that Americans understand, meaning the basic Americans, that it's not heads I win, tails the taxpayer loses. And I think that would be a change.
How does that square potentially with speculation that Jamie Dimon could be the next Treasury Secretary?
Yeah, I guess that's speculation. We'll see. These are the cross currents that are evident, in what appears to be the Trump cabinet or the hoped-for Trump cabinet. I mean, you have a handful of populists. I would put the vice president, by the way, in that category, Mike Pence, who's, by the way, handling the transition, not Chris Christie. And yet you have much more traditional establishment, Wall Street, hedge fund, private equity types as well, which is what they ran against. So stay tuned again. We don't know.
As you mentioned, in the early days of the Obama administration, I mean, Wall Street raged against him and thought he was going to be horrible. Obviously, financials have done extraordinarily well since then. Right. Could it be a funhouse reverse mirror image?
Well, if you had seen his appointments of Tim Geithner, his embracing of Ben Bernanke, his bringing out of Jason Furman, who was an acolyte of Bob Rubin, you would have realized kind of quickly on that the president, at least in economic and financial matters, was going to basically be more of the conservative Democrat, sort of Clinton-esque Bob Rubin wing of the party, and that would have shaped your views.
All right, Jim Chanos, don't go anywhere. We want to get more of your calls on commodities and everything else. This is Bloomberg.
You missed Jim Chanos for the last half hour, but he's still with us. He's the founder of Kinnikos Associates. And Jim, in our conversation, we talked a little bit about China, how you've been skeptical on them for years now. But the concern about China seems to have dissipated over the last couple of months, over the last half year. And it's no longer the front page.
We thought this was going to be a year where we'd be talking all about China.
No,
and
forget
it tended to be kind of a backstory.
It's all about the developed world. Do you think the Chinese government has learned to manage the economy better?
No. I think that that it's off the back pages because it's been off the back pages before. I mean, it's off the back pages in 2013 and 12. And but what is just relentless is just the economic model grinds on with just more and more debt, more and more reliance. If you recall, a couple of years ago, the buzzword was reform, and consumption and services would take over from exports and investment, and that hasn't happened.
How do bubbles end?
You know, they end for a variety of reasons that no one can ever foresee beforehand, and including short sellers. Now, typically, the furthest they get on in which you're borrowing money to pay interest, usually that means you're in the last innings of one of these things, and we're clearly in that realm in China right now, where more and more the banking system is getting stretched. Loan-to-deposit ratios are getting stretched. The banking system is relying more and more on the so-called shadow banks, despite the government's warnings against it. And we're seeing more and more state involvement, not less and less. Again, the whole reform idea was government was going to pull back, the consumption and service sectors would take the thing, and every time the economy has taken a step down, the government has stepped in to alleviate that with aggressive spending and more debt. And so they just, as I always say, there's no other playbook there. That's the only thing they know.
Well, speaking of playbooks, is the government then supporting Alibaba? How involved is the government in that company? Which, by the way, again, you're short on, right? We
are short Alibaba. The government may end up having an impact because this government in China is very, I believe, anti-digital, meaning they see the internet as a power base in and of itself. So they've moved very aggressively when certain internet entities get too powerful. Now, Alibaba right now is basically just a commerce vehicle. But who knows at what point does this government in China get paranoid about the size of the company? But that's not why we're short.
Speaking of the power of digital, one of the big losers in the U.S., almost everything has been up, but the big tech has not done well in the week after the election. Lots of theories for why that is. People are very concerned about Facebook growing too influential and maybe there being some sort of crackdown on that. Up until very recently, Facebook, Google, Amazon absolutely can't lose stocks. What's your take on big cap U.S. tech right now?
Well, I think for one, portfolio managers had to sell something to buy their Caterpillar. so those are big liquid stocks. I mean, I think there's some basic narrative about technology and Silicon Valley being out of favor, just as much middle America is in favor. But again, as we've said, who knows? I mean, it's too early to tell. But
prior to this election, I mean, the recent moves aside, did what we see in these big tech stocks look bubbly, like investors were sort of casting aside rationalism about valuations?
Well, again, it depends. I mean, we're stock guys, so in the FANG stocks, there's certain things we think are overvalued, and the business models are more questionable, and others I think are actually almost borderline cheap. So,
which ones are cheap?
Well, I'm not going to disclose where we are in the FANG specifically, but the point being is that I think everything's moving together right now thematically, and I think over time that's going to dissipate, and the companies are going to be judged on their own merits. But take a look at something like just as simple as net neutrality, which the Obama administration embraced and basically hamstrung the telecom companies to the positive of the internet companies. He's in the past talked about that not being fair to the telecom companies. So companies that have benefited from net neutrality, have gotten hit pretty hard. But will he enact anything? We don't know.
What do you think about what President Donald Trump would mean for big deals that are still pending, such as AT&T and its effort to buy Time Warner? Well,
again, I think that if we're right about possibly our populist theory we've been discussing, I think there'll be fewer business combinations. They tend not to happen in those time periods. And he's sort of indicated some skepticism, I think, on a couple of big deals. But that's all I could.
I want to go back on the populist question because it's undeniable that it's there. I mean, obviously you have Bannon, you have lots of rhetoric. It just doesn't feel like investors are thinking about that aspect of the Trump administration at all right now in any of these sort of notes that I read in the post-election trading. It seems to be all the pro-business side with none of the anti-business side.
Yeah, you've noticed that, huh?
I mean, it seems that way. Is this sort of a common bias that investors have, or what do you make of this willfully positive reading?
Well, I think willful blindness, right? I think that Wall Street, in and of itself, likes to think of itself as being able to shape candidates. And I think it certainly shaped the last president, who came in not knowing much about economics and finance, and he relied on people that had been there before, and at the end of the day were Wall Street insiders. And so far, you can make the case that President-elect Trump may be doing that too. But there are some signs that that's not the case. And so I think this is all going to work out over the next handful of weeks. But I think Wall Street's not counting on that at all, Joe. And that would be the wild card, that we truly get a move to a more hard capitalism, if you will, for lack of a better term, free market, but where government isn't assisting the 1%. To the extent they have been.
I like that idea of how Wall Street thinks it can shape the president. Does that mean President Trump will be keeping score by looking at GDP, at the number of jobs that are added, by the stock market's move, by the yield curve? I mean, what is he going to use to measure how well he's doing on the economy? And
well,
how
I
much
think he'll hear
he
from his voters. His voters will tell him that. I mean, he has a power base that's much different from previous Republican administrations. So the Republicans are now saying we are the party of the worker. We're a party to little man. I mean, that's kind of an amazing turnaround. I mean, at least in my lifetime, where the Democratic Party was always seen as the champion of the little guy, and Republicans, the party of big business and Wall Street and banking.
Is everyone in the Republican Party saying that, though, or
no? And that's what makes this so interesting. The Republican Party is divided, amongst itself over the spoils of winning. The Democrats are all in the corner, tending to their wounds
in their fetal position.
But I think that's what's really interesting. I think this is a fight for the heart and soul of the Republican Party, and that's what makes this really interesting, because it's going to be carried out in the halls of power, because they've got the levers of power right now.
Going back to China, I know we're sort of jumping around here, but whatever.
Listen, we're watching Joe's brain at work right here. Right
you mentioned stocks like Caterpillar. They've had a great year. Trump and the election completely aside, the hard commodities have done fantastically well this year, or a lot of them, iron ore, copper, you name it. What's next for them? Are people sort of losing? Could this last for a while? I mean, let's say China is doing whatever it can to keep the old engines of the economy roaring. Could this hard industrial commodities boom keep going for a while?
Well, the thing they were terrified of is just the indebtedness of the commodity-driven state-owned enterprises, like the coal mining companies and the steel companies. And so the great thing about China is when China says it wants to get a bubble going, it does. So when it told people to buy stocks, they did. Right. When it told people to try to buy bonds or real estate more recently, they did. Now it's trying to encourage people to buy commodities, because
there's retail futures trading.
Oh, it's crazy. It's gone. Even egg futures are breaking records. But portent in the wind. Very recently, they've just told the coal mines that they had shut down to balance prices and production. They could begin again. And I think that's worth keeping, because some of these things now, of course, in the law of unintended consequences, that is the Chinese economic model, people that are paying for inputs, like steel companies, are watching coal and iron ore prices go through the roof, and steel prices haven't gone up as much. So there's something. So you're helping the coal industry, but you're hurting your steel industry.
So the steel companies are getting squeezed by that.
Exactly. And so again, this is the problem with China's state-directed model. You think you're helping one area, and you end up hurting another, because you're not getting market pricing.
And of course, when we talk about China, there's this slew of money, hot money, that's kind of floating around looking for a home, looking for something that's yielding something significant or meaningful. Joe, Tracy Alloway has written about how it's sloshed from one direction to another, from stocks to bonds to commodities and now to property.
Right, and of course, some of it does leak out, and we've seen, for example, gaming revenue in Macau tick up year over year, or really start to accelerate for the first time in a while. Is this money sort of leaking out of the system again?
Well, you're seeing it. I think the government's trying to keep the keep the currency from actually going down faster. One of the more interesting little side notes about China, at least as it relates to the U.S., is because of the depreciation of the yuan, China's not catching up to the U.S. anymore in terms of GDP, in dollar terms. And so I think that's sort of one little side note on this. But people are finding a way of getting money out of China. Just as they cracked down on Macau a couple years ago, or getting money for people to buy houses in Vancouver. Now we got giant corporate mergers by Chinese companies.
Is Trump working out of an outdated playbook when he talks about China and their economic model right now? I mean, if anything, most people think that the currency is being intervened up. That's actually, if they were to stop intervening, that it would plunge much further.
Yeah, he calls them a currency manipulator.
Yeah. I mean, look, his team of Chinese economic advisors, I know a couple of them, they're relatively hawkish about Chinese activity.
All right. Jim Chanos, you're sticking with us, founder and president of Kinnikos Associates. A big story tomorrow, which Jim is watching carefully. Shareholders will be voting on Tesla's deal with Solar City, and Jim has been very vocal on both those names, as well as Elon Musk. So, of course, we're going to get his thoughts on that. This is Bloomberg. Shares of First Solar are plunging in after-hours trading right now because its forecast for 2017 earnings was below analyst estimates. The company sees adjusted earnings per share break even to 50 cents. The consensus estimate was for $1.82. In addition, First Solar also says that its restructuring may bring 2 years of unexpected losses, and it's going to be cutting its workforce at manufacturing facilities. Again, First Solar down by better than 11% in after-hours trading.
We're back here with Jim Chanos, and I just want to jump in right with that. First Solar down from over $70 earlier in the year. You saw it plunge below 30. What do you make of the solar business?
It's a pretty bad business, Joe. I mean, that's the problem. I'm actually bullish on solar becoming a source of renewable energy in the United States. It's just not going to be great for the shareholders of the solar companies. It's going to be pretty good for consumers, maybe for some utilities that get into what we call distributed solar. Large installations where they then distribute it. But the whole business of putting things up on people's roofs and small installations is just not economic for the companies doing it. And I think that's the real problem, and that's why we're seeing disappointment in these solar companies.
Speaking of solar, we're a day away from a shareholder vote on the merger of Tesla and its sort of sister company, SolarCity. You've been really negative about Tesla and the Elon Musk family of companies. The stock, Tesla has come off a bit, but it's still, I mean, very high compared to where it was a couple of years ago. There's still a lot of faith in the company to ultimately, you know, sort of change the world, perhaps. What do you make of this combination right now?
Well, I think the combination is absurd, and I've said that. So I don't know if I can sugarcoat it anymore, but it's ridiculous. And First Solar's results, while they're not a rooftop company, just goes to show just the risks that are inherent. There's deflation going on in the solar business, and Tesla's taking on these debts. There's negative cash flow at SolarCity. The shareholders of Tesla truly have to have their heads examined if they vote this deal in, but they might, and very well could. And so I think they're going to rue the day they did it, but they may in fact do it. I was just looking at the Bloomberg earnings estimate. I put a plug in for you guys.
Thank you.
Thank you.
Back in late 2014, the 2020 estimate for Tesla's earnings were $18. They're now $12. So, interestingly, the multiple on 2020, which is sort of our benchmark on Tesla silliness, is basically about the same. The stock was $250, $260. Now it's, about $190?
Right.
Yeah, it's about the same multiple on earnings they'll never make.
Right. That's the EEG function, by the way, on Tesla. Yet, what Tesla and SolarCity has going for them, Tesla being the sister company of SolarCity, is Elon Musk. And he is an incredible master, as you put it, of generating capital, whether it's in the capital
Raising
markets,
capital.
Raising capital, excuse me.
He doesn't generate any capital.
Important clarification.
Huge distinction, yes. Raising capital in public markets or through private investors or through subsidies. What is the story that Musk is telling, and why does he tell it so well? Why is it so effective?
You know, I was at a conference a few weeks ago, and someone asked me about in Silicon Valley, and someone asked me about this merger and the business models of Tesla, and I made my sort of usual snarky comments about it, and later that night, someone well-known sort of Silicon Valley person came up to me and started poking me in the chest, saying, "You don't get it," and I think maybe that's part of the problem. I mean. You know, here in Wall Street, we're pretty much focused on numbers and business models, and is something sustainable?
Like cash generation.
And cash generation, and do you make a profit? And, you know, are you competing in competitive businesses? And there it's a much different viewpoint. You know, it's almost a holistic type of a viewpoint. Well, if it doesn't work in this, it'll work something else out. And he's a genius, and so far, by the way, that's been right.
How is it different than, say, Amazon, which there have been a band of people on Wall Street say they're blowing tons of money.
Completely different.
And they show growth. What's the key difference?
Completely different. And it couldn't be more different. And when both Tesla and or Alibaba get compared to Amazon, I really have to laugh, because Amazon went public in 1996. Their last equity offering was in 2001. They have been free cash flow positive every year since then. And so Amazon's business model was brilliant. It was basically the glorified Dell model, in which we buy something on Amazon, our credit card gets charged immediately. He pays the suppliers his inventory 90, 180 days later. We financed Amazon's growth until very recently. Amazon only has about $20 billion invested in its entire business. Over 20 years. I mean, that's nothing. Bezos' genius was to basically create a platform, much like Apple did, in which basically there was synergies off that platform. Elon Musk is in the car business. He's in the auto business. That's a whole different business. It's capital intensive, cutthroat margins, a huge amount of money needs to be attended to service, safety, the marketing. It's a completely different, it's an old business. It's basically an old economy business. Yes, he has electric cars, but beyond that, he is competing against Audi, BMW, Mercedes, GM, and they all now have electric cars.
What does the end game look like for Tesla? How do you see that company ultimately getting restructured?
I think Tesla survives. I think it becomes a large niche automaker, but at levels of profitability that are going to be a lot lower, if any, than what people are projecting now.
So it's certainly not the scale that investors have priced in.
It's not going to have a market cap greater than GM now,
Okay.
not over the long run.
What do the Teslas, the Solar Cities, the Alibabas for that matter, need to do for you to change your position to be less bearish, maybe even bullish on them?
Well, again, I mean, we're numbers junkies, so I mean, we're going to look at every quarter and look at trends in cash flow, balance sheet, and in the case of some of those you mentioned, accounting. And so as long as if something changes, we tend to change our mind. But in the companies you mentioned, things are getting worse in all of them, not better.
One more question about Elon. As Scarlett mentioned, objectively, whatever you think of Tesla, extraordinary salesman, extraordinarily good at raising capital, telling a story. That video he showed earlier, walking all those people.
He should be on Wall Street, not Silicon Valley.
Is there anyone you can think of in recent history or history that's a good analog for him?
Well, I think his supporters probably would say Steve Jobs, right? I mean, just visionary,
Sure.
Seeing ahead of the curve.
What about his detractors?
I'll take a pass on that one. It's pretty clear we're negative on the company, and I don't want to make this ad hominem. I think the business model is problematic.
All right, Jim Chanos is sticking around.
Coming up, what you need to... No, I think we're actually holding on.
No, we're holding on to Jim Chanos.
Uh-oh.
We're sticking around because Jim Chanos is not leaving yet without our asking one more question. So, Jim Chanos, stay tuned. And, of course, we'll gear you up for tomorrow's trading day as well. This is Bloomberg. We're back with Jim Chanos, who was one of the earliest investors to spot fraud at Enron. So my question to you, Jim, is what is the next big Enron of our era?
Well, I mean, is the largest frauds we see right now, beyond a shadow of a doubt, are what my friend Jim Grant calls in the People's Republic of Madoff in China. I mean, I think that
I haven't heard that one.
That you know, whether it's the accounting and the banking system, whether it's individual companies, there's just a very low standard for accountability and accounting, and they make U.S. companies that are aggressive in accounting, like Valiant and others, just look like child's play.
Well, how about here in the U.S.?
Well, here in the U.S., I think one of the things that I teach in my fraud class is that it's almost easier in this cycle because some of the account fraud that I see is staring you right in the face in terms of the widespread use of pro forma earnings. And I think that's one of the things the SEC seems to be more concerned about recently. And again, Valiant, company we just mentioned, I mean, it's remarkable. Valiant still, people believe, is going to earn $6 this year. There was well-known investors saying it's cheap at 3 times earnings. And Valiant loses money. I mean, GAAP basis, they lose money. But this gets magically transformed by adding back expenses to get to $6. And there's a reason why those are expenses and why the accountants have them as expenses. And so this widespread use of we're going to present numbers any way we want. I mean, for God's sakes, Hewlett-Packard has been taking restructuring charges every year for years. You know, at some point, at what point is something not an extraordinary restructuring charge and it's just a cost of doing business? And these are endemic everywhere in U.S. corporate reports.
Speaking of industries that are in distress, not having their best days, hedge funds, lots of critics, lots of universities and endowments and pension funds not seeing the value in investing in hedge funds. Is this a cyclical thing, or is this sort of like a structural decline, or there just don't need to be as many and as much money in this sort of asset?
Look, I've been a critic of my own industry for a long, long time. The fees have just been too high. And our industry, a large part of our industry has basically been charging excessive fees for not a lot of excess performance, and in some cases less than market performance, if you do the analytics correctly. And that's just got to end. I sit on investment committees as well as being an investment manager, so I see it from both sides. I think there's been some movement in the last few years on that, but I think that an awful lot of capacity in the hedge fund industry at the end of the day is just simply overpriced glorified mutual funds, and that'll change. Now, one of the things I worry about on the other side is the move by large pension funds, endowments, sovereign wealth funds, to take money out of hedge funds, which have underperformed, high-fee hedge funds, and put them into high-fee venture capital and private equity. Because at the end of the day, that's a leveraged directional investment with the same, if not higher, fees than hedge funds, which may, in fact, if the market ever does encounter rougher waters, may do better. And that's a little worrisome.
So they're better off in moving all the money to passive ETFs?
I'd much rather, yeah, I mean, from sitting from a committee member on investment, I'd much rather see, if that's your concern, is to go to low-cost equity exposure than high-cost leveraged equity exposure.
All right, just to wrap up our conversation, we've covered everything. We started with the election, we went to China, we covered Europe. One thing that Joe and I have talked a lot about is this EMification of the developed world and how there have been failed political states in the emerging market world. And with all the upheaval in politics in the developed world, you wonder, are we likely to see a Western European nation join the ranks of a failed state?
What worries me in this question is the movement that we've been talking about all hour of more authoritarianism in the developed world. And the corollary to that is a little bit frightening to me anyway personally, is that we've gone from the haves and the have-nots to those, the masses and the scapegoats, and those that we must victimize and target for our misfortune. And that's a little frightening.
All right, Jim Chanos, very well put. Jim Chanos, thank you so much for spending the entire hour with us on What'd You Miss? This is Bloomberg.
I'm John Heilman.
And I'm Mark Halpern. With all due respect to the 21 Club, thanks for the heads up. Oh, on our magic show tonight, Donald Trump's great escape, Chuck Schumer, tries to piece his party back together, and a transition team attempts to make bad press vanish. But first, there's a new contender, apparently, for Secretary of State, who has appeared out of thin air. Late this afternoon, our friend and colleague, MSNBC's Joe Scarborough, reported that Trump's team is now considering South Carolina Governor Nikki Haley for the coveted slot of Secretary of State. That position, over the last few days, seemed like it was headed towards either the former UN Ambassador John Bolton or the former New York City Mayor Rudy Giuliani. Many people in Trump's orbit have been unhappy with those two choices and were eager to see other people brought into the mix. This comes amidst signs of continued dissension, disruptions within Trump world. Today, many people in Trump world tried to tamp down the notion that things were going off the rails in the transition. Kellyanne Conway, Trump's campaign manager, spent the day spreading a message of calm, telling reporters in Trump Tower that building a government from scratch is tough stuff.
Well, you don't form a federal government overnight, and these are very serious issues, very serious appointments. I know the president-elect himself, since I talk to him regularly, he's very happy with how transition is going, and from his perspective, he's been presented with any number of choices within each of the agencies and departments, and he's making those tough decisions, and we have an embarrassment of riches when it comes to many of those different positions.
Just in case that message wasn't getting through, Trump went on his favorite social media megaphone today, the Twitter, to dispute the reports that there are any transition trouble. So, John, this Haley thing is big. No other major personnel news today either announced or speculated about beyond what we knew yesterday. So where do things stand?
Well, we talked about this yesterday, and we'll keep talking about it for a while, I assume. To me, they're not like running late in terms of making the major appointments to who are going to take the big jobs. That's not where the disarray is. To me, the disarray is more these reports about infighting, and more importantly, the fact that they seem really far behind in terms of doing the bigger job of staffing the government. They don't seem equipped to hire those 4,000 people, to be in contact with the existing agencies, to be interfacing with the Obama administration. That's where they're way behind. On the big jobs, Kellyanne Conway's right. They should take their time and get it right, and they're not really behind on that as of now.
I agree there are problems, and I'm not trying to minimize them, but the transition I covered most closely was Bill Clinton's in 1992. They were scrambling. They were beset by policy controversies, gays in the military, refugees. I think, again, if we get a couple weeks down the road or even a week down the road and they haven't made significant progress that we can see, then I think there's a problem. But I just don't think by historical standards they're all that far behind.
Well, look, I mean, again, the bottom line is Bloomberg yesterday reporting that there still was no contact going on between the Trump transition and the major agencies. Yeah. But I think they are behind by that measure.
I have no idea.
Undoubtedly. Again, the more recent examples, I mean, again, we have kind of weird history here, right? 1992 is now a long time ago. 2000 was kind of screwy because of the recount and not knowing who the president was until so late. Barack Obama and his team, meticulous that they were way ahead of the curve, probably by some historical standard. I don't know. But look, let's talk about Nikki Haley, though, because it's an interesting thing. You know, you pointed out a lot of pushback for a lot of reasons against Rudy Giuliani. Now there's discussion of Giuliani's conflicts with people on the countries on the terror watch list that he's had as clients. Nikki Haley would be, symbolically at least, a hugely positive sign. Symbolically. I don't know what kind of depth she has on foreign policy, but just the notion of choosing a mainstream Republican, non-white woman in that job would be a huge step on Trump's part.
I'm not predicting this will be the lineup, but let's say Jeff Sessions decides to stay in the Senate and be kind of Trump's man in the Senate. Right. If you had Ted Cruz at Justice Department, Nikki Haley at State, Tom Cotton at Defense, and Jamie Dimon at Treasury, that would get a lot of people's attention.
There's a lot of ifs there, obviously.
I'm just saying, but those are people I think all are potentially in contention, and that would be a cabinet that would please a lot of people.
The left would be really unhappy about a lot of them, but they're going to be unhappy about anything. No, I'm saying they're going to be happy about anything. But those are picks that would be really different from some of the names we've been hearing up till now. Okay, so sorry about that. We ran real long on that, but whatever. Donald Trump already has courted controversy bigly with his selection of Steve Bannon as his White House chief strategist. But wait, there is more. Two new ruckuses, or is that ruck-eye, being raised over news reports regarding Trump's alleged transitional maneuvers. The first has to do with an NBC News story that says Trump is requesting top-secret clearance for his son-in-law, Jared Kushner. so that Kushner can sit in on the daily presidential security briefing. Instead of knocking down that report, Trump put out a tweet disputing a different story that he was considering security clearances for his 3 adult children. Trump said nothing about Kushner, whose increasingly influential role has some critics citing a federal anti-nepotism law that bars presidents from appointing family members to government jobs. The second controversy has to do with Frank Gaffney, a Pentagon official during the Reagan administration who, a Wall Street Journal report says, will advise the Trump transition team on national security issues. Now, Gaffney has been vocally anti-Muslim and has promoted Islamophobic conspiracy theories in the past, that's putting it mildly, including one about President Obama being a secret Muslim. Trump's team, however, for the record, claims that Gaffney has no role on the transition team. So, Mark, on a scale of 1 to Godzilla, how big a deal are these specific controversies that are causing, as I said, a ruckus to be raised?
You know, I'm still trying to get clarification about why it was so widely reported this morning by many major news organizations that Gaffney was involved, and the language they've given us still doesn't clarify it totally. They're saying he's not involved now. Just the fact that they let the guy involved potentially is a troubling thing. And I'll say again, one of Donald Trump's legacies as a manager is in matters of law regarding the foundation and his businesses, just not buttoned down, not the standards you need in the federal government. On Jared Kushner, he's going to be involved in the administration, and people can say it's inappropriate, people can say it violates rules. Pete Williams of NBC thinks it's fine for him to be employed and to have a clearance.
Pete, on the basis of consulting legal authorities, not
his reporting.
Not Pete's opinion.
Yeah, his reporting. Right. I think, again, the country, for the good of public policy, should deal with the reality. Jared's going to be involved, probably not inside the government, maybe, but probably not. Let's figure out what the right standards are, what's permissible, what's not, what he should do, and let's press for that. But let's not act like this isn't going to happen, because he's going to be reliant on Jared for advice.
Right, I agree with that. But I mean, I think that just raises a whole bunch of things we've talked about already in this show related to the Trump business ventures and how that's all going to work, which I think are really problematic, especially when you have crazy stuff like them putting up profit-making stuff on the .gov website for the Meet the President-elect and Meet the First Lady. That's all just so gross and disgusting. Frank Gaffney is the key issue here is this. Is he involved or not? If he's involved, it's poison.
Or even was he involved? If he's involved, there's one of two options. Either they knew his background and they didn't care, or they failed to vet him.
The dude is poison. If he's not involved, good. That would be good.
Yeah, but if he ever was.
I know. I thought he's hugely problematic. He's not the kind of person.
They need to learn whatever. If he had any involvement at all, they need to learn the lesson and not do stuff like that.
Especially given some of the problems that Trump has caused for himself in the past in areas that Gaffney is most odious.
Yep. All right. Kentucky Senator Mitch McConnell was reelected today as the Senate Majority Leader. Bigger news, though, came on the Democratic side when they voted for their leadership positions. Yesterday, we heard lame duck party leader Harry Reid taking after Donald Trump. Today, Reid's successor went in front of the cameras, Chuck Schumer, as expected, elected Senate Minority Leader. And in his first press conference in that role, he announced some new additions to join him in the leadership team, including 2 liberal senators elevated to leadership, Bernie Sanders of Vermont, Tammy Baldwin of Wisconsin, and also a Rust Belt moderate from West Virginia, the Senator Joe Manchin. Unlike Reid's response to the election, Schumer began today by saying Senate Democrats were ready to work with Trump on shared objectives while vowing to fight the president-elect whenever the party's values are, quote, under assault. Schumer called on Democrats to build a party that does not take the votes of working-class Americans for granted.
We need to be the party that speaks to and works on behalf of all Americans. And a bigger, bolder, sharper-edged economic message that talks about how people in the middle class and those struggling to make it there can do better.
All right, so we've talked about the Democratic Party in crisis. Schumer's moves are some of the first signs of a post-election party trying to get its act together. John, on the basis of what you just saw and what Schumer did today, how is he doing as somebody trying to grapple with the new reality?
I think Chuck Schumer has been waiting for a long time to be the leader of his party in the Senate. And he's been thinking about how to do it for a long time. He obviously hoped to do it in a circumstance, better political circumstances than the ones that he finds the party in right now.
You don't think he was always thinking, I'll do this under President Trump?
Yeah, or with his party in such obvious disarray. And these are only cosmetic things at this point. The proof is going to be in the proverbial pudding. Like, what do they actually advance? How do they fight against Trump and Republicans? But just in terms of the makeup of that leadership team, that is a Big Tent party. A leadership team that goes from Bernie Sanders and Elizabeth Warren over here to Joe Manchin over here. If that group can hang together, that's the right kind of a face for the party to put forward, it seems to me.
They say stuff. Schumer said, used language I've heard other Democrats grappling with this. Use bigger, sharper message, more focused. They need specific policies that they believe in that address working class voters that they can propose.
Well, I agree
and
with
maybe even work with Trump on, because Trump may go for some of it.
I 100% agree. If it's just
all this rhetoric,
but you don't want
and new people.
This is not the time for them, though, to be putting forward policy proposals. It's the transition. Yeah, like give the guy, he just announcing his team.
I'd be for new policy proposals today, but even if you don't think it's the time, all I'm saying is none of this stuff matters. Well, none of it matters. I mean, it's better than nothing, but I mean, you still have
he would be
old leaders in place.
If he did not,
they did not change the leaders.
I agree with that, but if he did not have that spectrum across the ideological spectrum, he'd be getting hammered
from either being too
far left or too far.
You want me to admit it's better than nothing?
Please.
Better than nothing.
Very good. Okay. Up next, Donald Trump ditching the media for a family dinner last night. We had a spy on the inside who will tell us about that scene after this. Donald J. Trump gave his press pool the slip last night, about 2 hours after reporters were informed by the campaign or the transition team that the president-elect was in Trump Tower and locked up tight for the evening. Trump and his family took it on the hoof, on the lam, and went out to dinner at the 21 Club. How do we know that that's where he went? Bloomberg's intrepid 21 Club correspondent, Kate Smith, seen here, hovering behind the president-elect, was there when Trump and his family arrived. We caught up with Ms. Smith in the Bloomberg hallway and asked her to file this report.
So last night, my colleagues and I were having dinner at the 21 Club, and we noticed that there was a very famous person sitting behind us. It was Ivanka Trump and her husband. About 20 minutes after we noticed that she was there, in came the entire Donald Trump clan. It wasn't exactly a standing ovation. It was more like a muted acknowledgement that he was there. Maybe half a dozen people got up to clap for him. He ordered a $36 burger and a Virgin Bloody Mary. We did hear that he was talking about a potential female press secretary.
Wow. That's stellar reporting, Kate. Thank you for that. Not telling the press pool about the president-elect's whereabouts is, of course, a major break in protocol, and one that the White House Correspondents Association called, quote, unacceptable in its statement about Trump's excursion. This was not the first time that Trump has shunned his traveling press corps. He's done it as a candidate and as president-elect. His spokeswoman, Hope Hicks, told reporters that a so-called protective pool hasn't officially been set up yet, and the journalists will eventually have, quote, all of the access that they have ever had under any president. Now, every incoming president invariably claims that he won election by going over the heads of the press corps, and then he bridles when the press corps demands that he give up any semblance of his privacy for the sake of public accountability. Enter Donald Trump, who has argued more flamboyantly than any of his predecessors that the MSM is irrelevant and whose privacy was more or less sacrosanct until he entered the political arena. So, Mark, what is going to happen now with Donald Trump? Will he inevitably be brought to heel by the press like every other past president? Or can this guy be the guy who actually says, screw it, I'm going to do what I want?
I'm optimistic and hopeful, but the press has to really be diligent about this, and we need to always talk about it in terms of the public interest. We need to be with the president-elect and the president of the United States, not because we're trying to bother him, but because it is our job to cover him. And in the world in which we live, it's Kennedy assassination, 9/11.
Reagan assassination attempt.
It's just essential that this exists. And what I don't want is for this fight to become such a lightning rod, as important as it is, that we don't think about all the areas in which we need to fight so that there is the kind of coverage the American public not just wants, but needs and deserves of this administration.
The press has an obligation to try to hold Donald Trump accountable against all of the norms that we expect from every president, Republican and Democrat. This is not a more important norm, but this is a norm, and there are reasons for it. It's not that we're voyeurs, and it's not that we particularly want to be peeping Toms in some way. It is the case that he's the most powerful, important person in the world, and if something happens to him, the public deserves to know at the moment, as quickly as possible, that thing has happened, in case he's incapacitated, as you said, and the power has to be transferred to another officer in the government, the vice president or someone else. It is important that the public deserves to know that, and the president should be respectful enough of the public that elected him that he should say, okay, this is a price of being president of the United States. I will willingly, and in some ways even gladly, pay it.
I go back to the Clinton experience because, again, it's the transition I covered most closely. 1993, that White House started to change things. They closed the access to the media to the upper press office where the press secretary's office was. They made a number of changes. And when I said, and other reporters said to the Clinton people, you can't do this way. This has never been done this way. They said, we don't care. Never been done this way. We're not playing by those rules. We're playing by different rules. Some of the rules perhaps are arbitrary. Some of the rules perhaps are antiquated. But the basic function must be allowed. They cannot cut off the public's access to the President of the United States and the President-elect capriciously. They have to adhere to the norms because they're norms for a reason.
The President can't be out in the middle of the night night clubbing in Manhattan without anybody knowing where he is. It's not.
Sign Fonzie up for that. All right, up next, we'll talk to someone who wants to be the next head of the DNC.
21 Club.
After these words from our sponsors. Cheers. As the Democratic Party regroups after their election shellacking, the race to lead the Democratic National Committee is on. We're joined now by someone who has thrown his hat in the ring to be the chair of the National Party, the South Carolina Democratic Party chair, Jamie Harrison. He joins us now from the great city of Columbia, South Carolina. Mr. Chairman, thank you for joining us again. Nice to have you back on.
Thanks for having me. Thank you.
Tell us why Hillary Clinton lost the presidential election.
Well, she won the popular vote, but she lost with the Electoral College. And a lot of that has to do with that this whole election was about people wanting to feel like they mattered. You had African Americans who've been saying for the past 2 years that Black Lives Matter. You had young people, even Bernie Democrats, saying that their voices were not did not matter in the Democratic Party. And I think you had rural working class folks saying, you know, Donald Trump is speaking to us because we do matter. And so, in essence, I think the Democratic Party has to get back to making sure that people, one, understand that we're listening to them, and two, that we appreciate them and know that they do matter. And that's where the fight is about the future of the Democratic Party.
Whose fault is it that didn't happen in this election?
I don't know if there's one individual that's fault. I think this has been simmering a long time, partly because I think our state parties have not gotten the love and the support that they so desperately need. I mean, the front line of having a strong party is the grassroots level, and that's state parties. And so we really have to, once again, invest in state parties. I know here in South Carolina, the only way that we break through is if we have a national partner that can help us and provide us the resources, the talent and know-how that they have in Washington, D.C., and we got the muscle down here in South Carolina. But you have to have that partnership.
Jamie, a large part of the Democratic electorate, particularly the part that was in favor of Bernie Sanders in the Democratic nomination fight, looks at the WikiLeaks emails and other pieces of evidence and says the DNC is corrupt, was corrupt in this last cycle, and rigged the entire process to give Hillary Clinton the nomination and to screw Bernie Sanders. Do you agree with that?
No, listen, I think there was a lot of long-time relationships that people had with the Clinton administration, and probably was too close. I mean, listen, I even had a friendly relationship with a lot of folks on the Clinton campaign, but I also had a lot of friends on the Bernie Sanders campaign as well. Even some of my staff was there. And so one of the things that we have to do is we have to make people trust the system again. We have to make them trust the party again. And the only way that we do that is by showing them, and all of these people are on the grassroots level, show them that we respect them, show that we're going to invest in them. And I think that's how you get them to once again come back to the party.
Jamie, if you became the chair of the party, what would you do? I mean, in a concrete way, what would you do to reassure the parts of the party right now that, again, feel like the DNC has been stacked against them? What would you do to make them believe that the DNC was playing fair going forward?
Well, you know, the one thing is, and the operative word is going forward. You can't go back and clean up whatever happened at that time. So all you can do is tell people, look at what we're going to do and work with us in order to build that. You be a part of this. So for a few things. One, I think that, you know, young people want to make sure their voices are heard. And right now, instead of just making the copies and picking up coffee, they want to have a seat at the table. I think we need to add a millennial chair, or what we have here in South Carolina is one of our vice chairs is under the age of 35. I think the DNC needs to add that voice to the table so that young people have a seat. I think there are things that we have to do with our state party, what I call the 50 states plus. We have to amp up and increase the amount of money that we're giving to state parties so that they can become the innovation centers for all the things that we can do on campaigns. You know, we have a fellowship here in South Carolina where we built this bench of talent, and we call it the Jim Clyburn Political Fellowship, where we train one young person from every county in the state of South Carolina with the goal by 2020 of having 250 young people across the state trained to run for office, run our county party operations, or be political operatives. Those are the types of things that I think if we did them in the states, we can strengthen that so that it doesn't matter if you have a charismatic leader like Barack Obama who's running for president or a policy wonk like Hillary Clinton. You can still touch the people and get the vote out.
Mr. Chairman, there's some people who are formally in the race like you. There's others who are said to be thinking about it. Handicap the race. Who's the front runner for chair right now?
Well, right now, this is the thing. Whomever's the next chair has to be a full-time chair, 24/7, dedicated to running the DNC and working with 50 states.
I know,
you got 50 states,
I know you and others think
territories.
that, but who's the front runner? Are
Well,
you the
I
front?
don't know
Are
if
you the
there
front
is a
runner?
front runner.
So wide open?
I don't. I think it's wide open. You know, I don't know if there's a front runner right now because many of the members that I'm talking to said, listen, we're trying to listen to everybody. We want to see what who's going to be in the race, and then we'll make a determination from that point. Well, so what I'm telling people is go ahead. Sorry.
Will Debbie Wasserman Schultz go down in history as a good chair, great chair, bad chair?
I mean, there were very positive aspects of Debbie's chairmanship, and then there were things that didn't work well.
Like what?
And so,
what's in the second category?
I don't. Well, I mean, do I need to say what's in the second category? I mean, the fact that you have a lot of people who are upset with the DNC. And so, listen, Debbie was very helpful here in South Carolina anytime we needed, but there's a lot of folks who didn't feel that way. And so, you know, I consider Debbie a good friend, and I know she tried, but in the end, we have to move on from that and to build the next generation of the DNC.
Mr. Chair, Mr. Chairman, we only have a few seconds left, but just to answer this question, the importance of the party right now is to focus on the base and building up the base, or to try to focus more on the center of the electorate. Where's the future for the Democratic Party in that regard?
You win elections by addition and not subtraction. And so that's all of the approach. That's base, but that's also reaching out to working class people in rural America, where we've lost over the past few years. And so, again, it's addition, not subtraction. And I think Donald Trump is going to disappoint a lot of the people who voted for him this time around, and we're going to be able to add those people in the 2018 race.
Okay, Jamie Harrison, thank you very much. Good luck in the race. Political strategist Liz Smith, Steve Schmidt, join us right here, right now, right after this.
Welcome back. With us now is Democratic strategist Liz Smith, who worked as the deputy presidential campaign manager for Martin O'Malley and was director of rapid response for Barack Obama's presidential campaign in 2012. She's sad because Boris Epshteyn is not here. Also, instead of Boris Epshteyn, we have Republican Stephen Schmidt, former chief strategist for John McCain's presidential race and an MSNBC political analyst. Lady, gentlemen, good to see you. There's some dispute about how messed up the Trump transition is. What do you think? Messed up or kind of like basically par for the course?
Oh, it's really messed up. I mean, and that's the thing is, he was a chaos candidate. I don't think people want a chaos president, and nothing he's done so far has, calmed anyone's fears about that. The question is, how much is it trickling down to normal people? I don't think that much. But, with any transition, and you know this, you float a lot of trial balloons, but it seems like all the warring factions in his camp are throwing spaghetti against the wall to see what sticks. They're already saying that it's broken out into a knife fight. So I think they've got to get their act together and project a little more confidence.
You don't need knives for spaghetti, but knife fight, spaghetti fight, what's going on over there? Good?
No, it's a knife fight. It's messed up. It's disorganized and chaotic. One would expect nothing less. But, look, we'll have a clearer sense a couple of weeks from now. One encouraging sign is they said they were going to drain the swamp. I think it's entirely possible that it was news to them that the transition team was stocked floor to ceiling with Washington lobbyists, and now it's going to take a week or so to get them all out. And, that's probably a good sign and consistent with his message. But we'll know in another week or two.
Joe Scarborough is reporting Nikki Haley, South Carolina governor, under consideration for Secretary of State. In terms of substance, you've worked in the national security realm, and in terms of optics, what do you think of that possible pick?
Look, she was an impressive political leader during the shooting in South Carolina, her handling of the Confederate flag controversy. I think that she's someone, as you look ahead in the Republican Party, is someone who's a serious candidate, potentially for future higher office. I have no idea if she knows anything about national security issues, anything about the complexity of the world. I guess we'll find out in hearings, but, certainly someone far outside the realm of the national security establishment that one would think to as you look to fill that post.
What do you think of the prospect of a Secretary Haley as opposed to a Secretary Giuliani from the point of view of competence and ideology and unity?
Well, look, I mean, it's less frightening as compared to a lot of the names that are thrown out. To Democrats, it's less frightening to hear a Haley than a Bolton or Giuliani. She doesn't strike fear through us. But again, to Steve's point, what's her experience? What qualifies her to sit down with these national leaders? And the unfortunate thing about Trump is that he hasn't surrounded himself with a lot of the heavyweights on his side. And the biggest concern I think that a lot of people have is how is he going to handle an international crisis? And when he's tested with an international crisis, don't you want him to be surrounded with some foreign policy heavyweights? She doesn't qualify as one. So I think, again, it goes back to me saying that they're throwing spaghetti against the wall and seeing what sticks.
To stick with foreign policy and national security again, because it's a specialty of yours, if you looked at just the range of names that have been floated, and not just for Secretary of State, but defense, for Chris Kobach, all these names that have got there, can you discern better now what the Trump ideology is, what Trump actually believes, or do you look at this range of names and say, I still don't have any idea what this guy actually wants to do on the basis of what we have seen so far?
There's no way to look at any of those names and have any idea what the agenda is, what the governing philosophy is at any level. I mean, you don't.
Just to put it simply, right?
I mean, some of the names floated, really are the political equivalent of the cast of the cantina scene from the Star Wars movies. And you have people that simply are not confirmable. And I think that it bears, I think it bears mentioning today. Orrin Hatch shot down cold the notion that they're getting rid of the filibuster. They can lose 3 votes on any nomination. And so John McCain and Lindsey Graham, for instance, are going to take a very tough line on people who have diluted sensibilities about the intentions of Vladimir Putin, for instance.
Yeah, but also you have Murkowski, you've got Susan Collins. And when people say that Republicans have control of the White House, the House, the Senate, they're not looking at the never-Trump Republicans in the Senate, and I think that they could be a real roadblock going forward. But, to your point, they are throwing a lot of some random names. Like Kobach is the one that scares me the most.
You were a sometimes critic of the Clinton administration. What's going on within your campaign? Sorry. What's going on in your circles now in terms of kind of accounting for why she lost and what the fallout of that should be?
Well, first of all, I think people are starting to come to terms with the fact that she lost, and it's not necessarily just that Donald Trump won. my fear is that some people are taking the wrong lessons from this, and that they're saying it needs to be an either-or, that we either need to talk to, the white working class or talk to Latinos and, black voters, that we either need to go with the Sanders people or we either need to go with the Clinton people. And that's why I think it's really important to learn the lessons from 2016, where we saw all the Democratic heavyweights, the DNC, throw its weight behind one very flawed candidate, not allow really any debate or any emergence of a robust debate. And we should have a chair debate all across the country. Let's go to all the states that Hillary Clinton lost, that Democrats should have won, and have an open debate with as many candidates as possible. I don't have a favorite in the chair race. And, I saw Jamie Harrison on before. He's a good guy. I've done work with him. Ray Buckley, good guy. Keith Ellison, good guy, but we need to have a robust debate about where we go going forward and reject a lot of the false dichotomies being thrown out there.
How much will the Trump administration, do you think, reach out to Democrats? Would that be a good thing to do?
Well, look, an enormous upgrade today with the elevation of Chuck Schumer to the minority leader, replacing Harry Reid, somebody who is not a obstructionist, somebody who wants to get things done. But to the point, Donald Trump will have to work effectively with Democrats. The notion that this is a unified Republican monolithic bloc is just wrong. This is the closest we've ever been to a European-style coalition government. The Trump party and the Republican Party, though cousins, are not the same party. And so, for example, when Donald Trump in his transition says, we're going to spend $1 trillion on an infrastructure package, you have a lot of Republican members of Congress laughing out loud. There's no appetite in the conservative wing of the Conservative Party to spend $1 trillion on infrastructure. So his coalitions and his ability to work effectively are going to be tested. And this is why the Bannon issue is such a serious one, that if Democrats refuse to let up, and I think that Democrats will refuse to let up on that question, it's going to cripple at a real fundamental ability the ability to have coalitions. It poisons the sauce.
The spaghetti. I want to stay with you just because we've been doing this with some of our friends here. Did yesterday with Mike Murphy and Bill Carrick, people who were absolutely incredibly confident for weeks. There was no possible way Donald Trump could win, stake their reputations on it. I just want to do a little. I thought I was wrong. I'll say it again. You were really wrong. Why were you wrong?
I had a lack of imagination. I never thought it possible that 6 million Democratic voters who supported Barack Obama would sit this election out. I underestimated her deficiencies as a candidate. I called Donald Trump very early in the primaries. Thought he would be the nominee.
Right.
But I did not think that at the end of the day that the American people would vote for someone who was so unprepared and demonstrably so through the debates, that had the type of character deficiencies that he had, and I was wrong about it. The anger of this country is something else, and I do think that you now will see a lateral line define politics, and above that line, people who benefited from the technological revolution and globalization, and we just heard from the people below in both parties who've been left behind by it.
You were wrong too.
I was.
You were in some ways more flagrantly wrong, but you were wrong.
Yeah.
So why were you wrong?
I maybe out of optimism that people would vote for Donald Trump, but look, I gave in to the same flawed assumptions that everyone else did. That Democrats, that young voters, that Latino voters, that black voters would turn out against Donald Trump, despite the fact that Hillary Clinton wasn't really articulating a reason for them to do that. And that was a big mistake on our part, and that is something Democrats need to learn from. We don't need to just focus on white working class voters. We need to give everyone a reason to turn out and vote for Democrats going forward.
Do you believe the children are our future? She's not even listening.
Literally, they are. Literally.
We're talking about you.
I got to ask you one more question, though. I know we're running over a little bit on this. I just want to come back to this. You, in addition to being wrong about this election, you also have been very critical of Trump's temperament, suitability for the office, et cetera, et cetera. A lot of Republicans who made those arguments are now grappling with how to confront him as president, what the proper attitude is. Do you put your reservations beside and hope for the best, or do you continue to be a critic on the temperamental, intellectual, other grounds? Where are you as you look at this presidency about how you should feel like you should confront Trump or accommodate yourself to Trump or whatever?
It was a legitimate election result. This is how we pick our leaders in the United States. However, the authoritarian impulses that we saw in the primary, the use of a Twitter account to intimidate, particularly towards a free press, cronyism, corruption, incompetence. People need to be prepared to speak out against it. Look, the stakes are very, very high. As someone who's been around a president of the United States and had had that honor in my life, the immense power of this office is something that everybody, whether they were friend or foe to him in the campaign, needs to think very seriously about. He's now the most powerful person in the world. He has the destiny of our nation in his hands. He has the authority to end life on this planet if he chooses to do so. That's a real thing. And so, as we think about a Trump candidacy, when he's right, support him.
Presidency.
Right? A Trump presidency. When the president-elect becomes president, when he's right, support him. When he's wrong, oppose him.
All right. Liz Smith, Steve Schmidt, you're both awesome, although you were wrong. I partly relied on you. I blame you when people say, why was I wrong?
I think everyone
I listened
wrong.
to Schmidt,
yeah.
for Christ's sakes. All right, we'll continue this transition talk next. If you're watching us in Washington, D.C., you can listen to us on the radio at Bloomberg 99.1 FM. We'll be right back.
Trump transition speeds along, and we're joined now in Washington by two reporters who are awaiting his arrival in January. NBC political correspondent Casey Hunt is on Capitol Hill, and Bloomberg Politics senior national political reporter Jennifer Jacobs is in our D.C. bureau. Casey, I want to talk to you about the Republican leadership in the House. There was all this talk leading up to the election that Paul Ryan might lose his job, and then all of a sudden he was unanimously reelected. How did that happen?
Funny how that works. It's the one thing that seemed to help Republican unity coming out of Donald Trump's election. Essentially, the Freedom Caucus that were, the kind of right-wing conservative agitators that so frustrated John Boehner when he was Speaker, had been contemplating a challenge to Speaker Ryan in the event that Hillary Clinton won the election. But Trump getting elected made unity among House Republicans kind of the imperative. Although I have to tell you, the mood in the room when House Republicans met, they all got those Make America Great Again hats sitting on their chairs. They kind of walked out of the caucus wearing them. People who were inside the room told me that the mood was was kind of solid. People were very happy to be back and to be in the situation that they are, but it was not euphoric, right? You'd normally expect that if one party won the presidency and also controlled both houses of Congress, the celebration would be hard to contain, and that's just not the case, because a lot of Republicans up here are still nervous about exactly what this means. Donald Trump has not exactly won this election on conservative policies necessarily. They're talking about spending $1 trillion on infrastructure. It's not clear how to replace the health care plan. There are so many questions up here. I think House Republicans have gotten to a better place over the last 7 days, but it started off pretty confusing.
Jennifer, I want to ask you a question about a Republican Senator, Ted Cruz. He was a supporter of Trump early on in the nomination fight. Then, of course, they were pretty bitter rivals. Then he insulted him at the convention, then endorsed him at the end. And now he's at Trump Tower yesterday, and his name's been floated for Attorney General. So what are the prospects that that could actually happen? What's the reaction been since that notion became part of the dialogue?
Yeah, so they needed him to come up. It was kind of an audition yesterday, so there's been a lot of lobby intrigue. All these reporters are staked out in the lobby. They're watching like hawks who shows up to go up that elevator to talk to Trump, and Ted Cruz was one of them. And at first, they were denying it had anything to do with a cabinet post, and in fact, Cruz's own staff was saying it just had to do with the agenda for the Senate and Cruz wanting to promote some, his agenda. But then that transition team just keeps floating names, and I was told pretty late last night that, yeah, sure enough, we are discussing him for Attorney General. And Cruz didn't necessarily know that when he showed up, but he was indeed being auditioned. They also, according to David Martosco from the Daily Mail, were asking him questions about, who would he recommend for some undersecretary positions for Justice and Homeland Security. So they were just kind of waiting to see how they got along with him. And when I asked today, I said, what's the reaction been to the news that you guys are considering him? And they said, strong.
Jennifer, let me just stay with you on the Kushner security clearance story. What's the deal there?
Jared's been the focus of the day today on a lot of pushback. So a lot of the transition team members have been defending him, saying, listen, he doesn't have a personal vendetta against Chris Christie. They got along very well. There were other reasons why some of these Christie folks are being pushed out and why lobbyists are being pushed out. There's also been this controversy about whether he would get the top secret classified clearance to attend the president's daily briefings. And I was told that essentially, one person inquired about that out of an abundance of caution, just wanting to be prepared and just asking what the procedures for that would be if that were something that would be necessary or wanted. And it wasn't really authorized by anybody with the campaign or the transition, but this person went ahead and did it. And so, they're just trying to tell me that there was a simple, innocent mistake.
Right. Okay. Casey, Democrats. A lot of action up there on Capitol Hill today with Senator Schumer and his new leadership slate. The party's still kind of a mess, though, at the moment. So let's talk about how things are on Capitol Hill with the Democrats.
Just about the only thing they're united on is Steve Bannon. They all think he should go, although it doesn't seem as though Donald Trump is willing to do that. But beyond that, Democrats are facing a pretty bleak couple of years here. On the Senate side, they can't for the life of them find somebody to lead the Democratic Senatorial Campaign Committee charged with reelecting Democrats and, holding the 25 seats that they're going to have up next year, or next cycle. There's just a hole there because it's really an impossible job to have to do. Schumer is trying to corral everyone who could possibly be a problem for him into one room. So he added Joe Manchin on the one hand and Bernie Sanders on the other to his leadership team to try to, it's not quite, keep your enemies closer because they're obviously all on the same team, but there's an element of that going on. He wants to make sure that the people that could potentially cause the most trouble for him are in the room and not outside of it. So I think that's a little bit of what you're seeing. But the reality is there's still, and he joked about this, he said, these people are young in Senate years. There just isn't a lot of fresh blood for Democrats up here on Capitol Hill right now. That's true on the House side also. Nancy Pelosi is facing this unexpectedly stiff resistance to her simply becoming majority leader again. She has ruled with a pretty iron fist, as many Democrats have described to me in recent days. And the frustration with her is real, but there's not necessarily somebody who's stepping up, a person to channel that frustration in a way that could actually be a threat to her. So it looks like she's likely to continue, but none of this solves the Democrats' overall problem, which is that it's not clear who the next generation of leadership for them is. I think there's this feeling that the Clintons kind of stifled anyone else from running for president. The Hill leadership has been the same for many years now, over a decade, really, and a lot of the younger members feel really frustrated. Now, of course, you have this division based on geography. You have essentially the coastal wing of the party versus the middle of the country. And, you know, one person put it to me that, hey, they want somebody who can walk into a union hall and be taken seriously, not necessarily push people around, but seem like a big deal. Of course, the implication is that Nancy Pelosi is not that person. Now, you know, you can read into it what you will, the reasons for that. But I think that tension is going to define the Democratic back and forth for a while. And as you guys know very well, Democrats are often a little less top-down, I would say, in their leadership. So I think there's some risk here that there's going to be a lot of intra-party back and forth for quite a while. I don't really quite see how this gets solved in the immediate term.
I want to ask you both for real quick answers to a simple question, starting with Jennifer. Your sources in Democrat, Republican Party right now, what adjectives would you use to describe how they're feeling about where we are post-election?
Well, if you ask the Trump team, they say they're, you know, 1 week removed from the most brutal campaign in history.
I'm asking about the mood of the people you're dealing with. Are they excited? Are they scared? How do they seem?
If the Trump people seem excited.
Excited. Casey, how do Republicans and Democrats on Capitol Hill seem to you?
I think the Democrats feel like they're pretending they're not despondent. Which is sometimes a winning battle, sometimes a losing one. I think Republicans are confused but determined, I would say. They're trying to figure out how to push their way through it.
Okay.
That's how I feel most of the time, confused but determined.
Casey Hunt, both determined and not confused. Jennifer Jacobs, maybe semi-giddy.
Yeah.
Thank you both. John and I will be right back. Welcome back. So tonight, Hillary Clinton makes her return of sorts. Ever since she gave her concession speech the day after Election Day, she has been largely out of sight. And tonight she gives a speech in Washington. John, what will you be looking for?
Well, Children's Defense Fund will feel like home to her. It's a very comfortable place for her to speak. She's got a long association with that organization. I really will look for her to, we've heard what she said in private. We have some reporting on it. I think it would be a very good look for her to stand up and say, you know what? I lost this election, and here's my self-analysis for why. And here takes some blame on herself.
Predict right now, will she mention that she won the popular vote or not?
Oh, I think there's about a 99.743% chance that she will mention that, yeah.
Okay, we'll talk all about that speech tomorrow right here on the program. John and I will be right back. Grab your internet contraption and go to BloombergPolitics.com right now. Story up there about what Senate Republicans could do to slow Donald Trump's cabinet confirmations, where the trouble might exist for Trump within his own party. Bloomberg Technology is next. John and I'll be back here tomorrow, same bad time, same bad channel. Until tomorrow, thanks for watching. Sayonara.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. New York City Mayor Bill de Blasio met today with President-elect Donald Trump at Trump Tower. De Blasio told reporters the discussion covered several issues, including immigration.
That proposal countered and flew in the face of all that was great about New York City, the ultimate city of immigrants, a place that has succeeded because it was open for everyone, a place built of generation after generation of immigrants.
Iranian President Hassan Rouhani says his country remains committed to a landmark nuclear deal regardless of who's in the White House. President-elect Trump has criticized the deal, which caps Iran's nuclear activities. U.S. Secretary of State John Kerry today made an appeal to all nations to continue the fight against climate change. At a UN climate summit in Morocco, Kerry said failure would be, quote, a betrayal of devastating consequences. President-elect Trump has called climate change a hoax and has pledged to cancel the Paris deal, limiting greenhouse gases. Legendary singer-songwriter Bob Dylan, winner of this year's Nobel Prize in Literature, won't attend ceremonies next month in Stockholm. The Swedish Academy says Dylan told them that, quote, other commitments make it unfortunately impossible. I'm Mark Crumpton in New York. Bloomberg Technology is next.
I'm Emily Chang, and this is Bloomberg Technology. Coming up, Cisco shares sliding after the company forecasts a tech spending slowdown on the horizon. The full earnings report ahead. Plus, Twitter suspends the accounts of prominent white supremacists as it attempts to curb abuse and harassment. And famed short seller Jim Chanos says Tesla shareholders should, quote, have their heads examined if they approve the pending deal. His full comments ahead. First, to our lead. Fallout from the election of Donald Trump continues to ripple through the tech world, especially when it comes to social media companies. Twitter says it suspended the accounts of prominent white supremacists. Among them, Richard Spencer, who's often credited for spearheading the so-called alt-right movement that supported President-elect Trump. Twitter also added tools this week to help users better filter out abuse. In a statement, the company says, because Twitter happens in public and in real time, we've had some challenges keeping up with and curbing abusive conduct. We took a step back to reset and take a new approach, find and focus on the most critical needs, and rapidly improve. Meantime, Facebook continues to come under fire for allowing fake news to spread in the run-up to the election. CEO Mark Zuckerberg has dismissed those claims. Joining me now, venture capitalist Jennifer Fonstad, co-founder of Aspect Ventures, and Sarah Fryer, who covers social media companies for Bloomberg Tech. So, Sarah, let's start with you and the banning of white supremacist accounts from Twitter. How connected is this to the election of Donald Trump?
I think Twitter has, in the run-up to the election, understood that there's been a dramatic increase in hateful conduct on their site. The Anti-Defamation League has run studies. There has been an increase in white supremacist, anti-Semitic, those kind of commentaries.
As a result of Donald Trump campaigning,
propelled up by the excitement over the election, not necessarily endorsed by Trump, but definitely they have found a way to rally around the election. And so the company was already working on tools to curb harassment in light of that. And I think that the release, the news that they announced earlier this week about some of the more stringent rules that are going to be in place, some of the better reporting tools that people will have, and now they're showing that they can actually take action. And I think that this is all, as you said, something that they've come under fire for in the past. And in the light of the election, they really need to take a serious look at it. For Facebook, it's fake news. There's fake news on Twitter, too. But overall, on Twitter, people are much more concerned about the amount of harassment and abuse.
Now, both Facebook and Twitter have been criticized for amplifying the voices that people wanted to hear. Let's take a listen to what Mark Zuckerberg had to say about fake news and whether or not it influenced the election. Take a listen.
Personally, I think the idea that fake news on Facebook, of which it's a very small amount of the content, influence the election in any way, I think is a pretty crazy idea.
Jennifer, what do you think? How much responsibility does Twitter bear here?
Well, I think we're seeing that the election in particular has highlighted and amplified how impactful social media is having, whether it's Twitter or Facebook. And so I think all of these private organizations, and we have to emphasize that these are private organizations. They aren't subject to First Amendment coverage. They're not subject to common carrier rules. But how they think about their impact requires them to reflect on what that looks like, even if it's a small percentage of that today, how that will change over time, and what kind of tools that they can use to on a non-arbitrary basis, manage fake news or harassment or aggression through their sites is something that they need to be taking a look at, and I suspect they are.
It's interesting. Of course, Twitter and Facebook are of completely different sizes. Facebook is enormous. David Kirkpatrick, who did that interview with Mark Zuckerberg and wrote the book on Facebook, suggested earlier this week that Jack Dorsey is taking a much more political stance, and where we're seeing Mark Zuckerberg be much more apolitical here.
Absolutely. Zuckerberg, it's very important to him personally to appear unbiased. We saw how Facebook reacted to the dispute earlier this year around trending topics when Gizmodo reported that there may be some liberal biases in the stories that they selected to be trending. Facebook almost overreacted to that. They fired the human editors. They invited conservatives to headquarters to speak with Zuckerberg and learn more about how newsfeed works. This is a very tricky place for Zuckerberg to be in. He does not want to be the arbiter of truth. He doesn't even want to block, biased opinion-mongering news, opinion masquerading as news. Those are going to be the most difficult articles for Facebook to try and restrict. Fake news could be easy. Those kind of things that are trying to persuade people are going to be a lot harder.
Jennifer, do you think Facebook needs to take greater responsibility to add more human editors, human curators of news, more like Yahoo News did back in the day?
Well, I think that Facebook has never characterized themselves as a news site. It's never characterized itself as a promulgator of news. And so I think that putting that responsibility on them from a human editing perspective then actually raises their liability.
But the reality is users are seeing so much of their news through Facebook.
I think that's fair, and the type of information that's shared. I think actually there may be some automated tool solutions, and users, don't forget the power of users themselves to be able to self-manage and self-regulate, and there's quite a lot of that already today. And Zuckerberg could actually put more tools in place to enable the individuals to be able to manage that as well.
But if people are only clicking on stories they agree with, maybe they won't understand what's fake, or maybe they have been, lacking their own tools to discover what news is or isn't to be believed.
I think that's a challenge, and I think that's a challenge, though, even before Facebook came along, because people often choose to hear information that they want to hear, and they choose Fox News over CNN in the same fashion. So how much of that responsibility falls back to Zuckerberg and Facebook versus the individual and the consumer and the education system that we try to foster acceptance of different voices?
By the way, Sheryl Sandberg, the COO of Facebook, did publicly endorse Hillary Clinton in this particular election. Let's talk a little bit about Snapchat, though, because we've reported now that they have filed to go public. They filed to go public before the election. Is Snapchat facing any of these allegations, or are they in a different place because the content is so ephemeral?
The funny thing about Snapchat is it's not feed-based, and in fact, it's not even one of those situations where you're really sorting through who to follow. They show you what to look at. They have their whole Discover channel that has media partners creating content. They have live stories that have covered rallies by Clinton and Trump, and both candidates have advertised on the platform. So Snapchat's really not been affected by this as much. And you're right, it is more ephemeral content that people are sending to each other. And so and internally, I don't think that Snapchat executives, even though they filed to go public before the election, I don't think they're worried about a Trump presidency. I think everything seems to be pretty much on track over there.
Jennifer, you were just awarded VC of the Year by Deloitte, and I'm curious how you're looking at investing in social media right now. You started a new fund, Aspect Ventures, a few years ago, and given now the power of Facebook and Twitter and Snapchat, do you see social media as is there really room for growth there?
I think there's continues to be amazing innovation, and I think what we're seeing where a lot of the innovation is driving toward is to the conversational user interface. So when you think about the messaging platforms, most of the innovation that we're seeing and investing in is really moving towards where the consumers are spending their time, which is on Slack, on Facebook Messenger, on iMessenger. And so where we see the opportunity for social media, more applications, will be driven off of building on top of that platform.
Last question to you, Sarah. Quick one. Facebook also facing allegations about it's come out saying they've, again, miscalculated the amount of time people are spending on certain ads.
It's I understand. It's a very confusing report. They're going through, basically, they review their 220 metrics that they give to their partners and publishers, and they found that in 4 new cases, they actually got their math wrong in a couple of significant ways, where they overstated how much time people spent on instant articles, overstated how much time, how far page reach went, and a couple other things. This is just their attempt to be a lot more transparent about their metrics, and in light of these mistakes, they're going to have a metrics council that meets regularly and gives them advice.
All right. Mark Zuckerberg has a lot to think about this week. Sarah Fryer, who covers social media for us, Jennifer Fonstad of Aspect Ventures. Thank you both.
Thank you.
Thank you.
All right. Coming up, we're going to be talking a little bit more about Cisco. Also, billionaire and Twitter investor Prince Al-Walid bin Talal spoke to Bloomberg Television from Riyadh earlier and weighed in on the state of his various investments, namely Twitter. Despite its falling stock price and questions surrounding a possible sale, Prince Al-Walid remains optimistic for the future of the microblogging site under CEO Jack Dorsey.
Jack Dorsey, who was my friend, just took over a year ago. And he just established many initiatives that related to sports, NFL and otherwise. I think these have to begin sometime. I'm very optimistic because you've seen the latest results of Twitter. Clearly put the floor on this $19, $20 range, which is our break-even points. So anything above that will be sweeter for us. You know, we're a long-termer. We still believe that the best days of Twitter are yet to come.
Still ahead, Jim Chanos, noted short seller and founder of Kinnikos Associates, holds nothing back on the Tesla Solar City tie-up and Trump's impact on tech stocks. This is Bloomberg. Tech stocks were hit hard by President-elect Trump's surprise win, though they've crept back slightly in recent days, and many have been questioning what a Trump presidency will mean for technology, specifically Facebook, Amazon, Netflix, Google. Kiniko's founder and famed short seller Jim Chanos joined Joe Weisenthal and Scarlet on Bloomberg earlier and asked what President-elect Trump means for big cap U.S. tech. Take a listen.
I mean, I think there's some basic narrative about technology and Silicon Valley being out of favor, just as much middle America is in favor. But again, as we've said, who knows? I mean, it's too early to tell.
But prior to this election, I mean, the recent moves aside, did what we see in these big tech stocks look bubbly, like investors were sort of casting aside rationalism about valuations?
Well, again, it depends. I mean, we're stock guys, so you know, in the FANG stocks, there's certain things we think are overvalued, and the business models are more questionable, and others I think are actually almost borderline cheap. So,
which ones are cheap?
Well, I'm not going to disclose where we are in the FANG specifically, but the point being is that I think everything's moving together right now thematically, and I think over time that's going to dissipate, and the companies are going to be judged on their own merits. But take a look at something like just as simple as net neutrality, which the Obama administration embraced and basically hamstrung the telecom companies to the positive of the internet companies. He's in the past talked about that not being fair to the telecom companies. So companies that have benefited from net neutrality, you know, have gotten hit pretty hard. But will he enact anything? We don't know.
What do you think about what President Donald Trump would mean for big deals that are still pending, such as AT&T and its effort to buy Time Warner? Well, again, I think that if we're right about possibly our populist theory we've been discussing, I think there'll be fewer business combinations. They tend not to happen in those time periods. And he's sort of indicated some skepticism, I think, on a couple of big deals. But, you know. We're a day away from a shareholder vote on the merger of Tesla and its sort of sister company, Solar City. You've been really negative about Tesla and the Elon Musk family of companies. The stock, Tesla has come off a bit, but it's still, I mean, very high compared to where it was a couple of years ago. There's still a lot of faith in the company to ultimately, you know, sort of change the world, perhaps. What do you make of this combination right now? Well, I think the combination is absurd, and I've said that. So I don't know if I can sugarcoat it anymore, but it's ridiculous. And First Solar's results, while they're not a rooftop company, just goes to show just the risks that are inherent. There's deflation going on in the solar business, and Tesla's taking on these debts. There's negative cash flow at Solar City. The shareholders of Tesla truly have to have their heads examined if they vote this deal in, but they might, and they very well could. And so I think they're going to rue the day they did it, but they may in fact do it. Yet, what Tesla and Solar City has going for them, Tesla being the sister company of Solar City, is Elon Musk. And he is an incredible master, as you put it, of generating capital, whether it's in the capital
Raising
markets.
capital.
Raising capital, excuse me.
He doesn't generate any capital.
Important clarification.
Huge distinction, yes. Raising capital in public markets or through private investors or through subsidies. What is the story that Musk is telling, and why does he tell it so well? Why is it so effective? You know, I was at a conference a few weeks ago, and someone asked me about in Silicon Valley, and someone asked me about this merger and the business models of Tesla, and I made my sort of usual snarky comments about it, and later that night, someone well-known sort of Silicon Valley person came up to me and started poking me in the chest, saying, "You don't get it." And I think maybe that's part of the problem. I mean, you know, here in Wall Street, we're pretty much focused on numbers and business models, and is something sustainable? Like cash generation. And cash generation, and do you make a profit? And, you know, are you competing in competitive businesses? And there it's a much different viewpoint. You know, it's almost a holistic type of a viewpoint. Well, if it doesn't work in this, it'll work something else out. And he's a genius, and
how is it?
So far, by the way, that's been right.
How is it different than, say, Amazon, which there have been a band of people on Wall Street say they're blowing tons of money.
Completely different.
And they show growth. What's the key difference? Completely
different. And it couldn't be more different. And when both Tesla and or Alibaba get compared to Amazon, I really have to laugh, because Amazon went public in 1996. Their last equity offering was in 2001. They have been free cash flow positive every year since then. And so Amazon's business model was brilliant. It was basically the glorified Dell model, in which we buy something on Amazon, our credit card gets charged immediately. He pays the suppliers his inventory 180 days later. We financed Amazon's growth until very recently. Amazon only has about $20 billion invested in its entire business over 20 years. I mean, that's nothing. Bezos' genius was to basically create a platform, much like Apple did, in which basically there were synergies off that platform. Elon Musk is in the car business. He's in the auto business. That's a whole different business.
Jim Chanos there, founder of Kinnikos Associates. Coming up, Cisco's transition from hardware to network services provider is hitting some speed bumps. That's next. This is Bloomberg. Cisco shares dropping in extended trading after the company reported quarterly earnings and a disappointing forecast. Sales and profit that indicate corporate spending on tech infrastructure is slowing. Joining me from New York, Forrester Research Vice President Glenn O'Donnell. Glenn, thanks so much for joining us. So obviously Cisco in the midst of a big transition. How would you rate the progress of the transition under new CEO Chuck Robbins so far?
Well, we haven't seen the real results of the full transition yet. A lot is changing at Cisco, and it's something we all have to understand. This is a big, giant company going through some pretty major changes. And I'm not surprised that Cisco is having some trouble with its earnings and its revenue right now. It is a flattening market. But compound that with the fact that Chuck Robbins is indeed changing the company in some pretty dramatic ways. And he's made some really good progress, I think, in making those changes, but it's going to take some time until we see the residual effects of that and, you know, where he's going to take the company into some of the growth areas.
Let's talk about cloud computing in particular. Obviously, this is an area where now Amazon, Microsoft, even Google are winning, yet you have some of the older school tech giants like Cisco, HP, Dell, Oracle trying to take on the cloud as well. How likely is it that Cisco will find strong footing here?
Yeah, we've written on this recently about the changing market landscape and how the cloud companies are really getting a lot of the corporate technology spending these days. And, you know, that's at the expense of the companies you just mentioned, Cisco being one. it's a tough market for those players, and they all have to transform what they're doing to succeed there. And that's not just selling to the cloud providers. All of this stuff needs technology, but they're not necessarily selling it to the cloud providers. They have to look elsewhere. Some growth areas around Internet of Things, for example, that's going to be a massive force in our world in general. And there's going to be a lot of spending there, and that's not necessarily all going to cloud. Companies like Cisco can capitalize on that, but it's a big departure from the past. And it's a big focus of Chuck Robbins with some of his M&A.
I did sit down with Chuck Robbins a couple of months ago on the one-year anniversary of him taking over from John Chambers. I asked him about the election. As I understand it, he has traditionally voted Republican. However, he would not tell me who he was voting for, unlike many other Silicon Valley executives who came out strongly against Donald Trump. What would a Trump presidency mean for a company like Cisco that is a global company and obviously has been a bellwether for the global economy for so many years?
I don't know that it's going to make that big of a change for Cisco. President-elect Trump has, he's made it pretty clear he wants to build out infrastructure, and that could bode well for a company like Cisco. But a lot of that infrastructure is more the physical infrastructure, highways and bridges and that kind of thing. And there, you got to question how much a company like Cisco can benefit from that. And maybe some of the politics of the geopolitics of the Trump administration could impact some international trade. But I think people will just come to their senses and do the right thing.
Glenn O'Donnell, Forrester research analyst there on Cisco earnings. Glenn, thanks so much. Chuck Robbins will be on Bloomberg Television tomorrow, Daybreak Americas, with our very own David Weston. Do not miss it.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with First Word News. Syrian President Bashar Assad says U.S. President-elect Donald Trump could be a natural ally to the Damascus government in its civil war. Speaking on Portuguese state television, Assad said his government needs to see if the incoming administration in Washington is genuine about fighting what he called terrorists in Syria. In the run-up to last week's election, Mr. Trump said he was ready to work with President Assad to fight Islamic State. Senate Democrats have elected a new leadership team. New York's Chuck Schumer will be Minority Leader. Dick Durbin of Illinois, Minority Whip, and Patty Murray of Washington State will be the Assistant Leader. Senator Schumer told reporters Democrats will work with President-elect Trump on issues where they agree, but challenge him when values or progress are under assault. Former French economy minister Emmanuel Macron has announced he's running for president in next year's election. Macron is a pro-EU liberal who's pledged to offer an alternative to both the political establishment and to populists. The European Union's unveiling plans for a new system of security checks to crack down on extremists. People from 60 visa waiver countries, including the U.S., will have to pay a little more than $5 and fill out an online form to obtain clearance to travel within Europe's 26-nation ID check-free area. I'm Mark Crumpton. It's just after 6:30 p.m. Wednesday here in New York, 10:30 Thursday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Let's take a look at the ASX, trading for 35 minutes so far and off about 0.2% right now. Not too much happening in terms of gains. Media stocks are doing okay. James Hardie, the building products company, was out this morning with first half earnings, $144 million there. BHP Billiton, the big miner, is holding its AGM in Brisbane. And take a look at the other big mining stock in Australia, Rio Tinto. Currently, it's back in positive territory after a weak start. This is after it sacked its energy and minerals chief, Alan Davies. This is in relation to payments of $10.5 million to a consultant in connection with securing the development of an iron ore mine in Guinea. Have a quick look at the NZX in New Zealand. That's looking quite flat. Nikkei futures expected to be flat as well. Out of Asia today, 10 cents the stock worth watching after third quarter revenue rose 52% to almost $6 billion. And locally here in Australia, watch the Australian dollar. Unemployment figures due out in a little under an hour's time, due to show a rise to 5.7%. I'm Paul Allen in Sydney. More Bloomberg Technology next.
This is Bloomberg Tech. I'm Emily Chang. Net neutrality is considered by many to be the Obama administration's signature policy on tech. Remember, this is the idea internet service providers like AT&T and Verizon can't create fast and slow lanes for web traffic, putting companies like Netflix at their mercy. The FCC passed rules in 2015 prohibiting this, but the election of Donald Trump has many industry watchers concerned that net neutrality could end up on the chopping block come 2017. While he didn't have a clear policy platform on the issue, Trump once tweeted in 2014, Obama's attack on the internet is another top-down power grab. Net neutrality is the fairness doctrine, will target conservative media. Joining us now to discuss what may happen to the idea under a Trump administration is internet industry analyst and author Larry Downs. Also with us from Washington, Tech Freedom President Baron Soka. So Larry, you know this issue inside and out. The idea is that Trump would eliminate net neutrality. What do you think could actually happen?
So I don't think that's what's going to happen. I think in that tweet that you mentioned was really in response to President Obama's announcement that he wanted the FCC to turn ISPs into public utilities, which the FCC did. That's the part of the ruling in 2015 that I think will go. But I think the net neutrality rules themselves aren't all that controversial. They either Congress or a new FCC may move them back to the Federal Trade Commission, but I don't really think that they're going anywhere.
So that means you think it'll remain basically business as usual, no fast and slow lanes?
Yes, business as usual for net neutrality, not business as usual, though, for this reclassification of ISPs as utilities. That, I think, will
So
go.
what would it mean for Netflix? let's say?
It won't change anything as far as Netflix is concerned, or for consumers, for that matter. In fact, none of these rules were really being violated in the years before the FCC had rules in the first place, because the Federal Trade Commission was already on the job enforcing them.
Now, Barron, our Bloomberg intelligence analysts have analyzed, outlined 3 possible ways that the policy could change. One, through the courts. We're expecting Trump to indeed appoint another Supreme Court justice, through Congress limiting the FCC's ability, or via a new Trump-appointed chair of the FCC. The FCC would then change the rules themselves. What do you think is the most likely path forward?
Well, I think you can count on the new FCC chairman, whoever that is, as Larry says, to start undoing the legal claims of authority that underlay the 2 open internet orders we've seen. And once that happens, I think that will, by default, kick the issue back to the Federal Trade Commission, which, as Larry said, could have addressed this issue starting about 10 years ago. And then that really forces Democrats to decide, do they really want to take the legislative deal that Republicans offered them last year? And if they do, they may succeed in getting some version of the issue back to the Federal Communications Commission, or they may get the Federal Trade Commission to have rulemaking power. But I think Larry's basically right. You're not going to see this issue change fundamentally. The 2010 rules were never really controversial at their core, and industry, if they had to, would sign up today to a regulatory pledge that would be enforced by the Federal Trade Commission.
Now, Larry, there has been debate over the authority of the FCC in general, whether it's net neutrality or some other issues. Do you think that authority will again be questioned in a Trump administration?
Yes, so I think so. I mean, the question has always been, in 1996, did Congress give the FCC any authority over broadband? And that's what we've really been fighting about for the last 10 years. It's not really clear. Congress may step in now and make this much clearer, I think, than they did. That was part of the bill that Barron mentioned. The FCC may voluntarily sort of reinterpret it itself and say, no, we're going back to the version we had all along up until Chairman Wheeler. But that will definitely be a keystone of what the new FCC will do, is to kind of re-examine its own authority and decide, what did Congress really mean, what really is our limit.
What about when it comes to M&A, Barron? I mean, Trump has indicated he's not a fan of the AT&T Time Warner measure, but, at best, what he believes, no one really knows. It's been a little confusing. There's been other analysis that Trump could be good for M&A, that a Sprint T-Mobile could merge in this era if they wanted to. How do you think the FCC, a Trump FCC, will weigh in on M&A issues?
There's really no way to tell. We have to wait to see who becomes chairman and who takes over antitrust at the Department of Justice. But the people who actually follow these things are, in general, skeptical of the need for government intervention, and are generally more willing to let deals go through. And then if there are issues, if there are real demonstrated harms to consumers, to come up with conditions that would really respond to those, instead of either blocking deals or using conditions just to regulate without going through the normal process, as the Obama administration has done. So I think probably we'll see deals more likely to go through, but it depends. And if you saw a wild card chairman come in that might follow through on what Trump has tweeted about, maybe things would be different. But there's no way to tell at this point.
Silicon Valley, Larry, is in an interesting position, having been so outspoken against Donald Trump, and yet these are some of the most valuable companies in the world. The Internet Association, which represents Amazon, Google, Netflix, sent a letter to Trump asking and urging him to keep the Internet open, to keep it a level playing field. How do you see the relationship between Trump and the tech industry playing out? Do you think Trump risks alienating them even further, and to their detriment, perhaps?
Yeah. Well, I hope not. Again, we don't really know. We have so little to go on. There was no real tech policy position by the Trump candidacy the way there was for Secretary Clinton. So most of this is a lot of speculation. But I think what we can hope for is that Republicans, are free trade. Silicon Valley likes things to be left unregulated, and hopefully those things will align, and the sort of character differences will work themselves out.
Barron, one thing we do potentially know is Trump's stance on immigration. We don't know necessarily how that would impact things like the H-1B visa issue, but that is something that obviously tech companies very much rely on. That there are a lot of skilled immigrant workers that work at technology companies in Silicon Valley. Aside from M&A, aside from the FCC, what are the sort of clues that you're looking at based on what Trump has said so far about how he will approach the tech industry?
Well, again, it's anybody's guess. There seems to be a certain battle going on for Trump's soul. And on the one hand, you have the Mike Pence traditional Republicans who are free trade and in favor of innovation and understand that high-skilled immigration is what makes San Francisco and the tech center work. And it's what brings talented, smart people to the United States. And then on the other hand, Steve Bannon has said things about there being too many Asians in the United States, and that maybe it's a problem that for our civic society that we need to do something about immigration. I mean, it's really unclear, and I am not confident that we know what will happen, but we're going to have to see how this transition shakes out and what happens right now in this very tumultuous process. And for people who are wondering when we'll get some comfort, when we'll know something, historically, these major appointments in the tech sector end up happening pretty close to inauguration. I mean, for example, the FCC chairman was not named by Obama until January 12th in 2009. So it could be a while, and then issues like immigration, that's not an issue that is going to be determined by a single appointment. That's going to play out in Congress, and that could take a very long time. But if I were concerned about that, I would wait and see how much the administration is willing to work with or even defer to Republicans on the Hill, because they get issues like immigration, and if they're the ones driving the agenda, it's going to work out well.
We're going to touch on that Steve Bannon story and his comments about Asian tech CEOs a little bit later this hour. Baron Soka, Tech Freedom President, also Larry Downs, longtime watcher of FCC action on net neutrality. Thank you so much for joining us. Tomorrow, we'll pick up this conversation and much more on the concerns of U.S. tech giants when we speak to Internet Association CEO Michael Beckerman. A story we have been watching: Microsoft has offered concessions to European Union regulators trying to smooth the way for the planned acquisition of LinkedIn. Europe's competition regulators started casting an eye over the mega merger in October, investigating the business activities of the two firms to determine whether the proposed merger could be bad for competition. Microsoft announced the $26.2 billion deal back in June. Coming up, what a Trump presidency could mean for the price of an iPhone. We'll break down the numbers next. This is Bloomberg. President-elect Donald Trump campaigned on a promise to tax goods manufactured in China, potentially as high as 45%. Part of a plan he believes will reinvigorate the United States and manufacturing by bringing it stateside. One company this could have a major impact on is Apple. A Chinese state-run newspaper warned Americans of countermeasures if Trump launched a trade war, including a tit-for-tat approach. Here with me to break it all down, what it could mean for Apple and other smartphone makers, Crawford Del Prete, Chief Research Officer at IDC. So how much would these tariffs impact Apple and iPhone users?
Yeah, so if you look at sort of how these tariffs would be levied, there would be negotiation, whether it would be 45%, whether it would be 20%, whether it would be 15%. That would be on what we call the OEM price or the original price of the product. So it's not going to be the $800 or $900 that end user sees. It would be something a lot less than that. But just for the sake of the argument, let's say that you get down to a number of $35 or $40. In all likelihood, a company as cash positive as Apple and generating what Apple generates would likely eat that charge. And, that would really be, one of their few options. Another option, of course, would be to pass that along to the consumer or to split that with carriers or to other channel partners they might be selling with. So, again, it definitely hurts the consumer in the long term.
Would that be advisable given that you've got other smartphone makers out there right now making decent products for a lot cheaper? Right.
So this is really, so Apple's kind of fighting a war on multiple fronts. They are the premium product. They are the premium ecosystem right now. They are not necessarily, there's also a huge ecosystem in Android that they're competing with. But what's happening is that in the middle of the market, you're seeing a lot of Chinese and other offshore suppliers that are starting to move up and offer really premium products at mainstream price points. I mean, $299, $399. That's getting you 4 gigabytes of memory and 32 gigabytes of storage and getting you premium battery experience and really strong products. So, if those products aren't necessarily affected in the same way because those products, those are not necessarily U.S.-based manufacturers, that becomes yet another problem for Apple in this scenario.
That said, aren't most electronics manufactured outside the United States? And if this happened, wouldn't affect all of those, whether it's Samsung or HTC, wouldn't affect everyone equally?
Absolutely. This is a global industry, and it's a global industry for a reason. And, interestingly, there's so much automation in, say, semiconductor fabrication, or the factory that you use to build a semiconductor. You actually don't need that factory to be based offshore. That factory could be based here. The reason those are in Asia is because all the other assembly happens in Asia, and it's more cost-effective to have those factories close to the point of final manufacture. So, again, if you start saying, well, this company is the company I'm going to tax, that has downstream ramifications for all the parts that get assembled.
Now, it's very complicated because Apple assembles the phones in China, yet there are parts of the process happening in Thailand, Malaysia, Singapore, Philippines, South Korea. So how realistic is it to bring manufacturing or some part of the manufacturing process back to the U.S.? How many jobs would that actually create?
Yeah, it would be a relatively small number because what would have to happen is that there would have to be a huge investment in robotics and in automation in order for that to happen in the United States. So you kind of start parsing words here. So what could happen could be that Apple could say, okay, we'll do final software load, we'll do final flash memory load, we'll glue the screen on at the last moment of manufacture in the U.S. And does that count as manufacturing?
Would that count?
Well, it depends on, where the lines get drawn. PC manufacturers have done some of that final configuration for years in the U.S. You look at a company like CDW, that does final storage configuration and final software load in the United States. Does that count as manufacturing? It's really final configuration. But it does employ people to do that. Now, having said that...
But you're saying realistically it's not going to be that many
Realistically, it's not going to be that many jobs. And also, it would add cost to the supply chain because those semiconductor factories and those screen factories and those other electronics assembly factories that are in Asia, those are not moving back anytime soon. So now you're adding transportation cost into the product.
Quickly, how many jobs? Hundreds, thousands?
That you could potentially add?
Yeah.
Oh my gosh, it could be measured in low thousands at the outside.
Okay. Crawford Del Prete, Chief Research Officer, IDC. Always great to have you here on the show.
Thanks.
Thank you. A programming note. In this week's David Rubenstein show, David sits down with Alphabet Executive Chairman Eric Schmidt. Among other things, they discuss cybersecurity risks from Russia.
Do you think the United States government is better at cyber terrorism, if that's the right word, than other governments are against us?
The one that I worry about the most about right now is actually Russia.
if you look at their actions in the last few months, they've done a number of very publicized invasions, attacks, and alterations, which can only be understood as cyber activity, and they're not shy about it. They don't mind people knowing about it. So this must be part of their strategy to keep in our face, if you will.
You can watch David Rubenstein's full conversation with Alphabet Executive Chairman Eric Schmidt, 8 p.m. Eastern on Bloomberg Television. More of Bloomberg Tech next. This is Bloomberg. China web giant Tencent reported earnings. Profit missed, but revenue beat, and that is thanks to three parts of the business: smartphone games, performance-based ads, plus payment and cloud services. Peter Elstrom covers the company for Bloomberg News, joins me now from our Tokyo bureau. And Tencent has trying to sort of transform the biggest revenue streams in its business. Peter, how well is that going?
Well, it's a pretty interesting quarter. The company boosted revenues more than 50%, so by almost any standard, that would be considered pretty strong growth. But at the same time, it's investing very heavily in some of these new ventures, and that's the reason that you saw net income rise a few notches more slowly than that. The company is the dominant player in messaging services. Through WeChat and then QQ. It's now investing more aggressively into cloud services, into new kinds of games and media content, into online payment systems, too. So it has a bunch of new initiatives that it's trying to invest in and expand its revenue from here, and also get out ahead of a slowing Chinese economy.
Messaging services, as you said, WeChat, QQ have been essential to Tencent's growth. What are some of the trends they're seeing there? Any signs of slowing growth?
Well, just for context, WeChat has about 840 million users, so that's about twice as many as Twitter, more than twice as many as Twitter. It's the most popular messaging service within China. Tencent also has the QQ messaging services. Now, the growth in those services is slowing a bit because they've now been adopted by almost the whole population. Tencent is now focused on trying to monetize those more in a couple of different ways. One, they're selling more advertising through those mediums as they offer new services. And they're also marketing games and other kinds of digital goods through them. So they're very, very popular channels for all sorts of promotions, and Tencent is trying to take advantage of those.
Now, Peter, Bloomberg has reported that a Trump presidency would have an outsized impact on Alibaba of all the Chinese tech giants. What might it mean for Tencent?
That's right. It's probably more of an issue for Alibaba at this point. Tencent's business is almost entirely within China at this point. It has ambitions to move beyond China. It recently bought Supercell, the maker of Clash of Clans and Clash Royale. So it is selling some of these games globally, but at this point it's been mostly focused on China. It has ambitions to expand in that direction, but it would sort of depend on how it executes that expansion.
All right. Peter Elstrom, our Asia Tech Chief, joining us from Tokyo. Thank you so much, Peter, for weighing in. A story now that is trending. Some controversial comments from one of President-elect Trump's closest advisors are resurfacing. The Washington Post has highlighted an interview between Trump and Steve Bannon last year on the Breitbart News Network. The two men talked about foreign-born employees in the United States, specifically in tech. Bannon said when 2/3 or 3/4 of the CEOs in Silicon Valley are from South Asia or from Asia, and a country is more than an economy, we're a civic society. Some interpreting that to mean he thinks there are too many Asian CEOs in tech. And that does it for this edition of Bloomberg Technology. Remember, all episodes of Bloomberg Tech live streaming now on Twitter. Check us out at Bloomberg Tech TV at 6 p.m. in New York, 3 p.m. in San Francisco. This is Bloomberg.
It's never a good...
is Charlie Rose.
We begin this evening with a look into President-elect Donald Trump's transition team and specifically his appointment of Chief Strategist Steve Bannon. Bannon is executive chairman of Breitbart News, which he describes as the platform of the alt-right. The controversial pick has drawn criticism from Democrats, civil rights groups, and some Republicans. The announcement comes as Trump promises to unite a deeply divided country. Joining me now from Washington is Ken Stern. He profiled Bannon in August for Vanity Fair magazine. Also with us, Joshua Green of Bloomberg Businessweek, and Philip Rucker of the Washington Post, and Michael Shear of the New York Times. Michael, I'll just begin with you. Tell me, where do you think Trump is? And before we specifically focus on Steve Bannon, tell me where you think the principal appointments that might be coming out soon.
Well, I think where we are is in a much more chaotic place than you normally are a week out after an election. The reporting that we've done here at the Times and Phil and folks have done at the Washington Post and elsewhere suggests that the transition has been very rocky. They had to change leadership in the first couple of days.